Oh, well, hello everyone, and welcome to this episode of Extra Extra as I fumble around, make sure things are still working here. Oh my goodness. The news, it don't stop for anybody, does it? Not a single person. Um I I'm not surprised too much. We did know by what was it? By Friday that there was going to be a deal, and it was just a matter of how it was going to be structured and everything. And I find it funny that Running with Bears pretty much nailed it on the head what the deal was going to be like. Um,
I mean, if I like the deals that I've done,
Quiet.
you
Okay.
do, if I'm trying to find financing for a deal, I will like
Which ways
try to
is it getting
extrapolate
dark?
out the core
Hmm.
business of, I'm assuming I'm the buyer in this case, where like I'll extrapolate out
Right.
my future couple years to show like I've got this revenue, I'll have this anticipated free cash coming in on top of what I have now. And that helps like lend itself to the deal. And I'm not in front of my computer, so I can't do the nerd math, but like in order to find the
Hopefully
debt
that's
equity
better.
split, what you're going to do is you're going to take whatever,
Is it?
extrapolate out
No,
whatever
it's getting
amount of
worse.
EBITDA that you think you can run the next couple of years, and then there's going to be an interest expense associated with this debt. And I can only take on enough interest expense that the free cash can handle, right? And like my hunch is that that can probably, on top of the existing debt, like I'm guessing, maybe 20 to 25, maybe it gets you halfway there. So then you're left with dilution being the rest of the answer to get the cash. I was struggling to get the math work.
Yeah, so that was hopefully that's a little better because I think I finally fixed the gain. Is that working out for everyone? That a lot better? A little or a lot better? Uh, I'm looking at the bar here and it's saying it looks better, but if you guys say it's still low, just let me know. Got some popcorn because I have a feeling we're gonna be dealing with a lot of popcorn stuff. Um, because so Sunday we got the full deal. I'm not gonna bore you with the article too much because I mean we know what it's basically about. It's about this. Let me recenter. Whoop. There we go. So Ryan Cohen sent a letter. Awesome, better. I like it. Sent a letter to eBay, which, I mean, at this point, the reason why it's been under wraps is obviously he hadn't been talking to them, which is kind of. You would think on a deal this big, you'd want to be at least somewhat talking to them, but I mean, he's talking now, so that's an improvement. GameStop is proposing to acquire an all of the shares of eBay at a buck 25. Now I know that the deal is composed half debt, half equity, debt and cash. We'll get to that in a second. Just like we said it was going to be. Cove is robo tripping. We'll get to that. We'll also get to that Burry sold. We'll get to that. Yeah, that's all on the list. You guys are jumping the script. Patience, young Padawan. Uh, um, which 125 is about a 20% premium of where the price was on close Friday. It was 8% based on where it was after hours. That changed quite a bit. Let me get something up here because I have a screener because as I told y'all, because of how wibbly wobbly, timey wimey that the stock market has been, I've been kind of looking more at M&A deals and things like that. Let's see if I can get this to resize a little better here. There we go. And so I've got all of them here that I've been looking at. Now, not saying I'm invested in any of these, but I've just been kind of following. As you can see, we're now at like a 12% premium uh, for GameStop on from the price that eBay is at currently. We'll also get a little bit more into that because as soon as this deal dropped, there was something really weird. Like GameStop rallied, which is weird for a merger and acquisition. Usually, the stock goes down by the difference of the deal because I mean you don't get free lunches. You have to buy to acquire assets, and that costs money or shares or something, which decreases the value of the underlying asset. Bold of me to assume normal things, though, with the meme stock world as GameStop rallied up. I think the peak of it was 8%, 10%, something ridiculous like that. eBay was up around 12%. So stop refreshing. There's nothing to refresh here. So basically, Ryan Cohen's plan is he's got 20 billion in debt. The rest is going to be financed likely from their cash on that first half, the cash half. The other half is dilution, like we said was going to happen because there was no other way they were going to get there. He also, and this will be broken down more clearly in the other one, says that he thinks that he can make an improvement on their EPS, which I'm sorry, I'm not buying the math on this one. So first, the offer price, 125, 50% in cash, with 20 billion of it being debt. The rest probably financed on that first half from GameStop's cash reserves. The other half from dilution, as we said. I, I also don't like that he's saying the unaffected premium. So basically, the premium before. So he's basically dating back the premium to when he first bought in, which I that's I don't buy that. Sorry, I'm not going to give you that. It's a 20% premium based on Friday's close. So yeah, like a 27% premium. That's a lot closer to reality. Cash on hand, yeah. So the 9 billion in cash plus the 20 billion. Obviously, they're not going to turn over all of that. So he has a 5% stake, and we'll get to the 13D. Now, the cost reduction, this is the part that I'm really having trouble with. So they're strapping all this debt on, which is going to mean that there's going to be interest expenses that's going to weigh down on the earnings per share. But Ryan Cohen here says, well, we can do what we did with GameStop and we're going to gut sales and marketing in half and reduce general administration by 500 million. So basically slashing SG&A in half, which is a choice. Also, we're going to reduce product development by 300 million. Let's take a look at the numbers and just see exactly what that is going to look like for eBay here. Get the financials going, and we're gonna close this down, and we're gonna actually. I like this better if we do it from this screen here. And we're gonna enlarge this so we can take a better look at things. Put this out a little bit. So basically what he's expecting to do with eBay, let's go. Yeah, we're on the income statement. So he wants to slash SG&A basically in half and basically reduce. So 300 million, 6. So he's basically wanting to slash their R&D department by a fifth, roughly. The price chart is ridiculous. Yeah, there's a lot of things ridiculous about this. My problem is if there was really this cost saving somewhere in eBay's operating expenses like their SG&A here, um I would have thought they would have found it already, but like if you scroll across here, like anywhere from like going back all the way back to like 2016, you look at their SG&A expenses and they've been pretty stagnant. Like I mean, you get 2017 here where it's up near 4 billion almost. But in this range between 4 billion and basically 3.25 billion is kind of where eBay has naturally rested over the past 10 years. Like that's ridiculously consistent. You got to think about, things like inflation in there and stuff like that. And so my big problem here is he wants to cut that in half. And I if you're going to do that, I'm not saying you can't do that. I'm just saying that you're going to need to justify it a little bit more than just this, like, where was it? I think it was on the third one here. Like this little thesis here and these little blurbs. Like I don't like, I know this is like the initial thing here, but like this is supposed to be your pitch book. Explain to me where you're going to get all this cost cut out. And he doesn't. Nowhere in here does he. And he's leveraging up the company like what? 4 or 5 times EBITDA? Like I'm just like, if you're going to be pitching this, you like, and this kind of brings me back to my theory that this isn't really for the eBay people. Um, Let me bring this back over here a little bit. Oh, I know why that's off kilter because, go back here. Um, because this isn't for the eBay people. This is for the GameStop, the people invested in GameStop already. But even then, like, you want to pitch them on the deal to get them to buy in, and the other half of it is for GameStop people to basically stomach the dilution. And meme stock corporate raider, yeah, yeah, that's the vibe. That is the vibe I'm feeling. But like this is what he spent 2 pages, and like 1 page is the disclaimer. That's your explanation here, and then we get this other page that's 8 pages, and 2 of them are disclaimers. His explanation of the company synergies between the two companies, like, I'm not disagreeing that these are the synergies. I'm just like, can you explain, like, these are just sentences. Can you explain like where the revenue growth is, where the like the business, like how much you're going to make, all of that stuff. Like, because clearly when you look at how he's modeling EPS, he's modeling it off just being able to cut SG&A. Like there's no, wait, so why are we using okay, so that's GameStop's. Okay, so wait, he's using diluted GAAP EPS. 20 billion analyzed cost reductions and the incremental dilution to 1 year. So is this like supposed to be the combined? Yeah, but like you're not factoring in the, yeah, that's eBay as reported before you fucking dilute. See, that math is also, that's bullshit math, Ryan. That is fucking bullshit math. I'm sorry. I only got to like briefly look at this on Sunday because it came like late on Sunday when I was editing clips and everything. But that's fucking bullshit math. So you're going to use the diluted EPS as reported before the 20 billion in debt you're going to strap on this. Sure, check our Discord DMs. Sent back to you, Amy. I just like that's also horseshit. So you're just going to say, "Oh, our price cuts," and then, patch on to the previous diluted gap EPS based on your dilution machine, but not considering the debt's implication on the EPS. One second, standing by. We may be getting some extra fun. We'll see here. This is our standby image. Sorry, folks. You there?
Hello. Hello.
Hello. How are you doing, Amy?
I'm good, but I think I lost you on YouTube.
Shouldn't have.
Can you hear me?
Yeah, I can hear you. It says it's still streaming. Um, yeah, if I had maybe planned this out with you, I would have done it the normal way. But since I'm doing it through OBS, this is really the only way we can do it.
Yeah. Okay. Yeah, I was just saying if you wanted me, I didn't know if you had talked about the interview or not, so I was saying if you wanted me to come on for that, but you're
Oh,
still on
sure,
TME
I
here.
can. I'm just dealing with some of the Ryan Cohen silliness. Oh my goodness. I hadn't gotten to watch it live because I was at work. Um, but like you said the interview was kind of okay. How can you break that down for me, and I'll flip topics real quick and we can always come back to the Ryan Cohen stuff.
Well, it's fine. It was Junk Savvy, like basically, well, somebody in the chat challenged me to debate, right?
Yeah.
I was in Rob's live stream, and they challenged me to debate. And I said, I'll debate any one of you. And Junk texted Rob and said that she wanted to do the debate. And then he went on the space and was like, Busy's like, here's your debater. And, she tells him, all snarky, just set a date, Rob.
Yeah.
Just
Yeah.
set a date.
Right.
And so he does. And then she backs out. P.S. I hate that the camera's on StreamYard, and I didn't mirror my
Oh,
screen, so it looks like
wait. So
I
he
had a
uses
stroke.
StreamYard instead of Restream like
Yeah.
we do. Oof.
Yeah, and I think my camera wasn't mirrored or something, but like one side of my face looked like it's like falling. I'm just like, well, that's terrible, because I think there's something wonky with the optics of my camera. But anyway,
Hmm.
um, so then you know, Busy. He then like Isaiah put up that comment of mine, and then Busy flipped out and said, "Junk's not going to do this debate." And
Right. All her little defenders had to come in and
yeah,
save her from
yeah,
herself.
yeah. And so Rob said that Busy and Junk were calling him, and like every time he gets on the phone with them, it takes like 3 hours. And he was busy. He was actually traveling from Florida to Missouri, so he had to
Right.
set up this whole setup here over the weekend. And
Hmm.
he flew in on like last night, and they were setting
Hmm.
this up. They were like, he forgot his mic in Florida, so they were running out to get a mic
Oh
and all kinds
shit.
of stuff. So he was just like, I don't have time to spend 3 hours on the phone with you. Like, are you going to be
Right.
there or not? And I think probably what they were doing was they were trying to have some kind of control over this. They
Right, because they
were
didn't want it to be a shit show, especially when everyone was crying and complaining it was going to be a shit show.
not even a shit show. I think that they hold a captive audience. They hold the host and co-host spot. They can mute, they can kick, they can control everything, and they couldn't
Hmm.
control this. And so I
Right.
think they were probably trying to
Just
put
like
their grubby
when I
little
had
fingers in it.
just like when I've had any interview, like when we had the Josh Cohen interview, I mean, I probably could have controlled the interview a little better, but I had complete control. I could mute anybody at any time I desired.
Right. Um. So he was like, "Look, I don't have time to talk. I'm traveling. I'm trying to set up my home studio, and I don't have time for this. Like, are you going to
Mhm.
be there or not? Like you said, you wanted the debate. Like, are you going to be there or not?
Right.
And they ghosted. They ghosted him. So
Of course they did.
I'm like, "Ugh, I mean, I'm not going to leave him, and I could have just said. And then Rob's like, John Burton says he'll come on to debate you, and I was like, that's pretty weird. Like, it's supposed to be, two ex retail traders debating, and now you want me to debate the ex CEO who's already been charged with
Yeah,
securities
that was
fraud and
kind
is
of
under
like
active investigation. Like, that's crazy. And I have like, this happened last night, and I'm like, I have no time to prepare for that. Like, I don't. What are me and John Burdick even going to talk about?
well, and it feels like and this isn't like a cut at Rob. It felt like a setup bait and switch, you know what I mean? Like
Hmm.
they got Busy in there. Busy had to be saved from herself, and so John Berta was going to, or someone was going to show up to basically play damage control. And that's not on Rob. Rob thought he was getting one thing too and got another thing. So,
Hmm. Yeah, exactly. Um. So yeah. So I was like, I'm happy to come on there with you. We can just do like question or answers or whatever. Like, I
mhm.
didn't even know what he was going to ask me, and I honestly, I had a couple of things pulled up, and I was like, all right, I guess we'll just pull up the standard stuff. And so, but it was fine. Have you watched it or no?
No, I haven't. I was going to,
Okay.
and then save the John Burtis stuff for Saturday because I figure he's got his
Yeah.
own steaming pile of shit. Um,
Yeah. But
did you unleash the hot potato project hot potato?
yeah, I did. And it's the audit that the GCC did for the day before the shares were canceled, right? So they sent it
Mhm.
over to AST, so AST knows, that the certificate allocation, all that stuff. And so he's like, he goes on, he's like, that's not a broker audit. That is the allocation or whatever. And I'm like, it's 105 broker dealers and the
Yeah.
shares that they were allocated. Like, it's not a broker audit. It was the allocation. Like, and what I think he thinks that a broker audit is like every single long position and every single short position. And you know, yeah.
Yeah.
So yeah, so that's what he said. He said that's not a broker audit, and you know, when do you need to do it? Tomorrow. Okay. Sorry, I had to sign
No
a
problem. No.
permission slip for my son. But so yeah, I mean, I tried. Rob doesn't he's not a market person at all.
Right.
And
Which is why I think they've latched on to him because it's usually what they do with a lot of these personalities. They are
mhm,
completely ignorant of the financial side of the stuff. And that's not being mean to Rob or anybody.
no.
It's just
Yeah.
he's not invested. And he's even admitted as much. Like when we came after him about
Yeah, he
the
said it
Michael
today.
Castaneria stuff, he's like, I don't
Mhm.
understand this finance stuff. I don't.
Yeah. Yeah. And so and me, and how I talk, and I actually was actually
Mhm.
trying to bring it down a level, but even after I went back, I was in platinum space, and they were like, it was pretty technical, and I was like, I was really trying not to be, and
Right.
I don't know how to not be, I guess. Um, but yeah, it's so weird because we're on a lag, so I see you talking on my screen, but it's behind times from where we are right now.
Right.
Anyway, but I mean, I think it was fine. You just asked me the questions, and then Berta
Mhm.
came on after, and to go with his side or whatever. And
Mhm.
but yeah, I mean, was it what it would have been had I been debating my Junk Savvy? No, not at all. So I
Yeah.
mean, you just have to watch it and you'll see. But
Okay.
yeah, so and now Junk Savvy's tweeting, and she's tweeting out. She's
Oh, of
the
course. Now
nerve.
that she's not under the gun, suddenly her mouth
The
starts
nerve,
working again.
yeah, the nerve of this person. So she just tweeted out with like a caution sign that says "Wreck the Narrative," number 4787 MMTLP,
Uh-huh.
XTD narrative, no proof of any overages. So now she's coming out after all of this,
Right.
and
She wanted you to play your hand without
No, she didn't want.
her.
No, she didn't want to. No, that's how she's gonna spin it. She's gonna spin it like, oh, I did it on purpose, and she's a liar. She's a chicken shit liar who didn't show up to the debate that she asked for,
Mm-hmm.
and that's the end of it.
Yeah.
But now I'll let you go back to talk about GME. I just wanted Cynthia, you wanted me to jump on here to talk about the debate because I didn't think you had watched it yet.
I hadn't. That's basically what I was going to do after the GME stuff if I had time, because I've got our favorite GME person, Marantz Rants, and you know how he likes to talk, and so I figured I was going to squeeze it in and watch it
Yeah,
since I didn't get to watch it, and I'd get to watch it live. So,
yeah.
but yeah,
Okay, well, I'll let you get back to it. I got to go do all this mom stuff now. So, but yeah, I just wanted to jump on here real quick and say
okay,
hi.
alrighty.
Okay, buddy. Well, have a
See
good
you
show. I'll see you on
Saturday.
Saturday. I can't
Yeah,
wait
that
for
should be
Saturday.
fun. We'll
Nick's
be talking about
Nick, yeah.
Groupon.
I'm excited. Yeah, it's gonna be fun.
Yes.
Okay,
Alrighty.
let me know when you actually watch the interview.
Okay, I will.
Okay. All right. Bye.
Bye. Alrighty. Well, thanks for dropping in, Amy. Back to GME stuff. Your company 20. Well, to be fair, the you receive is like what his shareholders receive. The one thing about this eBay deal is like they get to run off with cash. Like the whole burden of the operation is dumped on shareholders. Um, the debt, the dilution, like the eBay side of it actually is they just get $125, excuse me, $125 a share. So I mean, not exactly accurate, but I mean, if you were talking to the GME folks, yeah, this is an accurate meme. Speaking of which, I do have sort of how it breaks down. And I think this is kind of the gambit that Ryan Cohen is trying to pull here, is that since he's grabbing for such a large company, like even with this massive dilution, the per share price is still a premium technically. I mean, it depends on when the dilution happens and how much this debt factors in, but as to like their forward growth, as to how the market cap going forward past the deal. And of course, this is also pro forma. So the only information we have is the information we have right now. Like other things in the deal can affect this. This is like a hypothesis based on the factors we know. I've yet to find a crystal ball to be able to predict the future, so this is where we're at. So the big problem, first of all, with this dilution for shareholders is you are basically 3xing the float, and you're now a minority interest holder in the company. You went from being, aside from, like insiders and institutional investors, but like retail basically was the stockholder. And now anyone who holds GameStop right now is going to be like a quarter of the company, a little over. So whoever it is, whether he's just going to dump these shares on the open market, which would be kind of stupid, or whether he has some sort of investor in mind or a consortium of investors, they're going to run the company. And also, terrifyingly, if that's the route this is going, I mean, it could be like they could remove Ryan Cohen. Like, if they have a large enough control stake, they basically run the show. That's the other terrifying here, is that this could be a loaded gun that backfires right into Ryan Cohen's face, because he needs, at the current price, to basically dilute so much that the new dilution would own 72% of the company. And like, you could restructure the deal to make it where instead of cash, it's a cash in equity deal. But I don't think that like the eBay side of the deal would bite on that, because why would, again, it's the discussion we had last Saturday. Why would eBay owners give up their complete ownership? And it's looking at it from this other way. Why would GameStop owners want to give up their control of the company. Well, I mean, the stock appreciates by about $10. There's that. But you lose pretty much control of the company. Whereas the other way around is like if it was eBay getting these shares in a share and cash or equity in cash as opposed to just a cash deal, suddenly, it looks less like, why are we being subservient to Ryan Cohen as per his deal? He wants to be the CEO at the end of this, which is something we were kind of surprised about. From Saturday, we kind of figured that this would be his hurrah, cash out and move on, but he wants to stick around and be the CEO. So, okay. But this is the nugget. You're going to own less of the company and you're going to have less of a voice, but the shares are going to be worth considerably more. And the potential that Ryan Cohen could lose control of this whole thing. Like I said, he would need to dilute to the tune of 1 billion plus shares, a little under a billion, 1.25 billion, so 1.14 billion roughly, and it would wipe out the current shareholder base. They would be like a quarter of the company, and these new entities would be the controlling shareholders. And you just got to kind of hope that they're aligned with Ryan Cohen, because they could just turn the revolver on him and say, we're the captain now. We're the captain now. We run the ship. And, that would be kind of weird. This here is just an explanation of why I have two prices. So this first one is just a straight, how the formula works for it is just the straight market cap. So you're taking the combined market cap of the two entities, combining it together, and then dividing it by the total pro forma shares to get this price. This second one is based on this one, which basically factors in that most of GameStop's market cap is its cash. So what this does is it removes the part of the cash that would be leaving the balance sheet to pay this deal. Because remember, he has 20 billion in debt, and half the deal, like see here, half the shares is 27,250,000 million. Ooh, I wish it was 250,000. It's 250 million. So the difference is if you have 20 billion in debt, then you need to remove 7,250 million from the balance sheet under cash and cash equivalents. So that is removing that and removing it from the market cap consideration, because the market would change the overall valuation of the company because that cash left the balance sheet. And that's where you get the 3282 down here, is basically the company being revalued based on the fact that it just lost a significant chunk of its cash position. Then we got eBay, their response to it, which is pretty neutral, to be honest. But I'm still struggling, like I was Saturday, as to why they would take the bait on this deal. eBay, a global commerce leader that connects millions. Yeah. Stop jerking off to yourselves. eBay's board of directors, in consultation with its finance and legal advisors, will carefully review and consider the unsolicited proposal to determine the course of action that it believes is in the best interest of the company and all eBay shareholders. eBay shareholders are advised to take no action at this time. I mean, fair. You just want them to kind of, sit still and wait. With 135 million buyers across 190 markets. So the board will review this proposal with a focus on value to be delivered to eBay shareholders, including the value to GameStop stock consideration and the ability on GameStop to deliver a bidding actionable proposal. See, that last part there, like, it kind of gets back to when I was looking at Ryan Cohen's actual proposal, that it's back of the napkin stuff, and you're not really making a strong argument. That may be coming forthwith, or the board of directors may ask for it, but like what was posted on Sunday was pretty like some of the numbers I kind of I quibble with their efficacy, um, and they're not really detailed at all. They're like, give me a 5-second elevator pitch of why GameStop should buy eBay. You know, um, and then of course we got the 15D filing, and this is where, or the 13D filing, and this is where I just kind of. The majority of the position is in options. The actual share position that Ryan Cohen holds is 25,000 shares, which equates to 1/100th% of the float, which is big, but like you're not showing real strength here. If you're trying to convince the board that you're being forceful here, the big thing is that like he and I was thinking about this after is like he can't actually leverage a bunch of GameStop's cash into this because he needs that cash to complete the deal transaction. I suppose you'd get paid out on the shares and then you can just, use those to close out the give out the payment and whatever have you. But, like, where was it? There we are. But like, yeah, this is not like 1/100th% of the shares. Like, I don't know what to tell you there. I mean, like, yeah, sure, a lot in options that, maximizes your ability to use what cash you have available that's not tied down by the deal, but you couldn't put some of your own skin in the game since you want to be CEO, throw some money out there. And then the rest of where we go from here, since we've kind of covered all aspects of the deal, is how things broke down on Monday, because there were a lot of opinions and there were a lot of different things that happened both Sunday night into today. Um, uh, I hate how sycophantic people are about this whole thing with Ryan Cohen. As the comment section is pointed out, as we pointed out on Saturday, and as a lot of people pointed out, this is some corporate raider style bullshit. And like going back to Ryan Cohen's Hollow Man post, which was apparently published 2 weeks after he began building, and that's a pretty loose term, building his position in eBay. Like, this whole deal plan as it stands, I would call just like the Hollow Man Ryan Cohen described. Okay. So you're not doing anything innovative. You're not taking really much of a risk. You're not saying that there's synergies and ways that we could build the company and explaining how that could grow revenue, add revenue growth. No, you just want to do the GameStop experience to eBay, which is just gut the company and hope that you can shrink costs enough to make. Rant says he loves his GameStop stock and they love him back. Cringe. Yeah, I'm sure we'll get to that here in a second. But you're not really doing anything to actually grow the company. You're just gutting it. And your brilliant idea was to basically, growing GameStop, growing its revenues, expanding the business, coming up with innovative ways to make GameStop relevant in the current era. That's too hard. Working to be successful, that's too hard. I'm just going to use money and buy my way into being successful, which sounds like something a rich, entitled billionaire would say or do when operating a company. It's just it's exactly the kind of thing that Ryan Cohen has been saying that he's been fighting against this entire time. It's the living embodiment of this deal. Like, why work hard at something when you can just use money and do it the easy way? As I believe someone in the comments pointed out, and his Business Insider said, GameStop CEO just gave the most awkward interview about how it would pay for eBay. I'm sure this should be fun. I didn't get to watch this live, so let's see how it goes.
Today, GameStop offering to buy eBay for $56 billion. The stocks are both up big in the last month. In the pre-market, CEO Ryan Cohen saying that combined company will be a real competitor to Amazon. And joining us right now live and exclusively is the man himself, Ryan Cohen. Good morning, and thank you for joining us.
Morning.
Great to see you. So there's so many questions about how this would all work. But before we get to any of that, just give us the backstory here and the rationale behind wanting to go ahead and try to do this.
Before he answers, I get the distinct
eBay
feeling.
has the second largest.
I don't know why it unpaused there, but I get the feeling this is going to be exactly like when he was on CNBC for the whole Stapler Gate thing and completely sandbagged the interview. Like, I had some discussions with people on X about this interview in the aftermath, and I'm like, if you don't want to be on CNBC, you are an adult and can make adult decisions. Just don't go on CNBC. Like, you don't like CNBC. That's fine. You can go hang out with grifter Charles Payne on Fox Business if that's what you want to do. But to go on a network you clearly don't want to be on, why? Why bother? Let's go.
eBay has the second largest commerce franchise, and there's a big opportunity to do something much larger and pull costs out of the system, as well as accelerate revenue growth and leveraging our physical infrastructure, our focus on collectibles. Can be a much larger business, but bringing in an entrepreneurial mindset.
I can see why Hannah said that he has negative charisma. I mean, not that I was not aware that he has negative charisma, but dude, bro, could you be excited? Like, even if I don't necessarily like the deal, this is like the deal of the century for you and your company. Act like you're excited about what you're doing.
Is what I plan on doing into eBay and building something much larger.
He's sandbagging.
Okay, so you've built up a stake in this company already. You've had conversations with the company. You've tried. What's happened here?
No. We're just starting.
You're just starting. And one of the questions I had was, why not try to initiate conversations outside of the public sphere before putting this into a...
Fair.
I don't know if we're putting it in the context of hostile necessarily, but
I'd call
unsolicited,
it that,
if you will.
I'm trying to be nice. Okay, cool.
For obvious reasons, eBay is a public company. There's all kinds of perverse financial incentives from the board to the management team. So there's only...
And you have to deal with them. Like, I don't know how that doesn't change that. If they don't like your deal, they're going to reject it anyway. Like, the job of the board is to find the best deal for its shareholders and the best interest of its stakeholders. If they don't, they get sued. Like, it's just... I don't know.
One way to approach something like this.
Invariably, the audience, and I know a lot of people are going to ask, how does the math for you?
Cue the title card. I made the title for the live stream. I didn't even know that was coming. Thanks CNBC for the help.
Given the price tag, $56 billion, given the market cap of GameStop, which is a fraction of that, I know you have this $20 billion financing letter from TD, but sort of walk us through how
they
you
move it
could
up to
get to that
25
price and how it would work.
It's on our website. It's half cash, half stock. But the details are on our website.
But they
Can you help?
aren't. But they aren't. They aren't, Ryan. That's the problem. You put like no detail into your plan, or at least the plan you showed us. Like, you couldn't be bothered in explaining the synergies between GameStop and eBay to put more than a fucking sentence in each category. What are you talking about?
I've read them, but can you help our audience understand them?
Yeah, which part exactly?
All of it, Ryan. That's why you're here.
Well,
I'm glad he had the same response I did. Are you fucking serious? Let's rewind that back. I need to see the look on his face.
I've read them, but can you help our audience understand them?
Yeah, which part exactly?
Well,
that's beautiful. That's fucking beautiful. Yeah.
I think we can start
So
with the
glad I
idea
popped
that the
popcorn before
market
this.
cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Oh.
Yeah,
Okay.
we'll see what happens.
Are you a fucking Reddit mod? We'll see what happens. It's like, what? The expressions on his face. They're so beautiful. He can't believe that these are the responses that he's being given by the CEO of a public company. These nothing fucking answers. Yeah, exactly. Like, how do you even do anything with that? He's completely sandbagging the interview. It is so fucking obvious.
Hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
It's half cash, half stock.
Right. But like, you're basically diluting by 1 billion shares. Who's buying the stock, Ryan? Like, how, like, what are we doing?
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So, Ryan, that's a pretty straightforward question. I don't get it. Like,
yeah.
Where's the rest of the money coming from? Andrew laid it out pretty clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability.
Right, but who is going to eat 1 billion shares? That's the $1 billion dollar question. Multi-billion dollar question, actually.
To issue stock in order to get the deal done.
Yes, yeah. Who's buying it? Who is buying 1 billion shares? That's the gap. Like, your shareholders sure as fuck don't have the cash. That's a lot. We're talking about 25 billion Most people don't have that under their couch cushions, Ryan.
But the full details
Massively
of the
dilutive.
offer are on our website.
No, they are not. No, they are not. They are significantly lacking in several areas, which, if you want to rewind to the back to the front of this live stream, I kind of went over them. Like, you don't. Okay, I kind of am done with this silly interview, but like, let's go back for a second and the fact sheet, I think, was what it was here. Yes. Let this zoom in here. Like, oh no, it wasn't the fact sheet. It was the proposal, right? Yes. Like this 8-page proposal, 8 pages. 3 of them are like disclaimers. And this your explanation for the mathing on how you're going to deliver value to shareholders. You're not going, you've diluted based on EPS, based on the future share dilution, but you haven't adjusted for the debt. You're just going as reported, and you're just going to slap on three extra. Oh my goodness, bots, be gone, Satan. Anyway. And you're going to staple on like by just doing cuts. There's no actual growth. And that, like, you spend a sentence at best explaining the synergies. Like, calling that an explanation is just, it's a choice. It is a choice.
But you're on our air. We thought we'd get
actual answers. Yeah, I know. I fucking thought so too.
I don't understand your question.
They want to know who you think is buying 1 billion shares of GameStop and basically taking over this company for you to fund this acquisition. Like, do you need it like faxed to you, written in Crown?
So Ryan, sorry, it's Melissa Liebeck at the NASDAQ. Basically, you know, you've got $20 billion presumably from TD. You've got $9 billion of cash on your balance sheet. So that's 29.
Right.
Half cash, half stock. You might issue more shares. That's what you're talking about. So it could be dilutive to current GameStop shareholders. I want to move on, though, in terms of your vision for this combined company, because saying that a combined company could rival the likes of Amazon sets the bar pretty high. How do you foresee that happening, given some key
That's a
differences
good question.
between your model and Amazon's model? Notably, Amazon has a huge logistics hub, able to offer all this other sort of delivery service, and GameStop and eBay would be confined to the platform.
There's an opportunity to build a much larger business, to make the business much more efficient and to accelerate revenue growth. And eBay's a very strong business. You look at GameStop as an example. GameStop, very difficult business, should have been bankrupt multiple times over, and it's doing okay. It's making a few bucks. eBay is in a very, very strong position, but it could be in a much stronger position, and it could be a much larger business than what it currently is.
That is disappointing on so many levels. Like if you're trying to pitch this, like, well, it kind of goes back to, like, I think he realizes he's only pitching this to GameStop people, because if he can just get, the eBay people to buy into the cash deal, like, the business plan part of it is just, do the GameStop shareholders buy it? But like that's a lot of nothing. You're expecting current shareholders to become junior members based on that interview in a handful of sheets. It's GameStop's only making a few bucks. Yeah, at least it is something, at least. I think he was supposed to be like the idea was deprecative humor. It would have been nice to have maybe because I mean it is rumored that he'll be on Fox Business. Maybe we'll get more about this business plan. But like, it's no space helmet. No, we don't do space helmets here. Nope. Not a technocrat here. We save the we save the space travel for Weaver tainted silly idiots. Oh, Ryan looks tired. Yeah. I don't know why. I think part of it is he was just sandbagging the interview like he did last time when he was on CNBC, which brings me back around to the point of if you're just going to sandbag the interview, just don't take the interview. Maybe that's just me. Just don't take the interview. So we had the wonderful story of Michael Burry. As soon as the news came out of the deal, he's like, it makes perfect sense. I would love to have his, intuition on it making perfect sense. Where was it? But he then said that he may not be in the position more than the week. He may cut some or all of his position, which I kind of clapped at him for. Like, it's fair. If you are up in a position, at least cut enough that you take profits on your way up. I'm sure Tony has done that plenty of times before and can attest to such in the comment section. No spoiler alert on any of those trades. But like saying that you're going to cut some to all of your position, that's completely different. That's saying that you don't trust the play anymore. You don't trust why you're in it. If you're going to liquidate the position, you think you've got the most you can get out of it. And then of course we got the full story on that Burry sold his entire position. He was having a trouble with the Berkshire. Let's see, we'll get to that in a second. He said that the thesis was never compatible with greater than 5x debt EBITDA. I was never okay with interest coverage under 4x. I discussed this more in GameStop makes its play from earlier today. As a result, Jimmy is the first sale since I started this Substack. Yeah, and to be fair, yeah, that there is a lot of leverage tied up in this deal. $20 billion. Or on that interview, they said up to 25, which again was in that range that Running with Bears said on Saturday. 20 to 25 billion was probably the max they could get leverage-wise on this deal, leveraging up eBay because they already had debt on their balance sheet. So that was the most that they could probably extract. And so, like, yeah, when you got this huge LBO situation. Oh, Tony, always be taking profits. Exactly. So yeah, like my big problem is that Michael Burry fell for the Gameshire Hathaway Gameshire Hathaway meme. Like games, I don't understand how it took Burry till Monday afternoon to figure this out. Right, because you were talking to me Friday about you wrapping up your position pretty much on the news of the deal, because it was just, see, if I was in your position, I would have done the same thing too. This deal gets announced and GameStop rallies like what? It was 4%, and then on Sunday overnight into Monday pre-market, it was up 8%, which is wild. When you're in an M&A deal, the buyer goes down by the amount of the deal because that's money, cash, assets coming off the balance sheet. Shares are assets that's coming out of the company. That's assets of the company that now have to go to this deal. So already it was trading at a ridiculous premium. Of course, that was your opportunity to sell. He waited until all of that premium, all the way up to 8%, melted away, plus down 10% during trading today. Ouch. Ouch. But I don't get this. Like, he got suckered into the whole Gameshire Hathaway meme. Like, GameStop never had to be that. That's one thing that I will give Ryan Cohen. eBay definitely makes sense from a business side. If you want to, build this e-commerce platform, it makes perfect sense. The deal itself makes no fucking sense. The idea makes sense. The deal doesn't. I wanted a buy cash flow business on the that's what all of us were figuring was going to happen. Buy a company that you can remodel. Like that was the whole discussion we had when I had Adabit on, where I was like, okay, how do we structure GameStop to be the Toys R Us or a game store of the future? Well, you treat it like like your local game store is right now. You've got your physical media, which is going to be less video games and more like board games, tabletop games, trading cards. You have your collectibles, which also is that trading cards market, PSA, your power packs and things like that. You buy or create your own e-commerce platform for video games. The acquisition there that I was thinking about was Good Old Games, and then transforming it into a platform where you could basically buy and sell and trade your games either between GameStop or other people. You had ownership of your games again. It wasn't just some you were renting your game basically from Steam or wherever. You own the game. You can sell it to other people on the platform. And then you go out and buy Corsair, and you build a budget PC system that you could sell in the stores that competes with consoles that would be cash flow directly into you. Plus, you could sell whatever other higher upgrade packages that you wanted and things like that. But that business would need to be cleaned up to be profitable, because Corsair kind of right now is, and you can sell different peripherals that would help with the cash flow in the store, and you would have a name brand product to sell as opposed to just cheapo third-party stuff. And then you could go from there, and if you wanted to do e-commerce still, you could buy Newegg, which is significantly cheaper than eBay and basically does the same thing in this business model. See, that's the part that also drives me crazy. Why not just buy Newegg? Again, it feels like what we discussed Saturday, where it feels like he's reaching to justify his pay package, which has gone like under the radar in every discussion, including the CNBC discussion. Like, no one seems to be mentioning that anymore in this equation. Like, but that's what it is at the end of the day. He doesn't want to spend the next 10 years missing out on his pay package trying to refurbish, Corsair or refurbish Newegg or something like that. He wants to win now, and he wants his money, and it just feels so gluttonously greedy. It feels 100% like an 80s style corporate raider nonsense, which again goes back to the this is the personality you said you were fighting against, Ryan. It's so fucking wild. So absolutely wild. Oh my goodness. Where do I even start with this? If there was stupid tweet of the week for this show, Michael's cope for Michael Burry buying out of his position is, if Ryan buys any version of Bed Bath & Beyond, I'm out. So obviously, it has nothing to do with the debt ratio and the debt to equity ratio of the company and all this stuff as the reason why he's getting out. He's getting out because Ryan Cohen is going to buy Butterfly. He's going to buy the empty shell of Bed Bath & Beyond and save all the baggies from ruining them fucking selves. Jesus Christ. You are a fucking idiot, Michael. Also, this was sent to me, and I thought it was funny. 1 second here. Before and after Ryan Burry saying that he was getting out of GameStop, Ryan Cohen was following him. Now he sure fucking ain't. Oopsies. Oopsies. Oh, well, we'll get to Morantz. And we'll get to that later here. This is another level of cope that I think is just absolutely dumb. GameStop is not actually buying eBay. eBay will turn down the offer and will get a bid from Shopify, and then GameStop will make money on the eBay warrants. No, that is absolute cope. Please stop. Stop. How are you getting the money? I mean, that's the only way that does work, though. I like the not a real dolphin meme there, but like, I mean, it's the only way this deal works. Who do you think is buying 1 billion GameStop shares? Who? Because that's what this dilution requires. Someone to buy over 1 billion GameStop shares. $25 billion. I'm not doing it. Tony's not doing it. No other retail investor is doing it. So who's doing it? Yeah, I also had some hard takes for Reese. Kramer totally misses the mark here as Ryan Cohen's refusal to play by Wall Street norms. No, he did like this. Yeah, green mail. At least Ham gets it. That this is indeed green mail. eBay is a great deal for Cohen only. Absolutely. Abso-fucking-lutely. Oh, but Ryan was trying. He was clearly playing. Like, see, that's the thing here is when people said that Ryan Cohen melted down on CNBC, I figured it was going to be your normal cable news stuff where both sides can play to their audience and it's like a pro wrestling fight. Like nothing of import was said or spoken. But no, this was an attempt at a legitimate interview and Ryan Cohen sandbagged it. Like the interview was a joke. And of course, if Anthony Pompliano is showing up to like get grease off of your grift, then I mean, that's really how greasy it is. I do like Nick Nemeth coming in here. He will be joining us Saturday. We're going to talk about Groupon. Apparently, I didn't realize that, Nick Nemeth, maybe he can cut me a loan because he's going activist investor on Groupon. And so he's going to be on Saturday to talk about that with us. But back to the present, Michael Burry sold GME because of 5x leverage on non-PE adjusted EBITDA and sub 4x coverage. Please compare that to the average private credit leverage lol. Fair point. Fair point indeed. So I think this is more of the same stuff here. I think the GME merger takeover is second nature. If the deal happens, it goes smoothly, then this will allow hedge fucks market. It's supposed to be makers there, bud. Shuffle a new position. If eBay pushes back and goes proxy vote in addition, they will need to account for every... What? Okay, well, we're already all over the board here. So let's go ahead and oh my goodness. I've got a whole list of Morant stuff that just needs my attention because of how dumb it is. So let's see how fast we can get through that.
Welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. It is Saturday, May 2nd, and we're going to talk the evening time now, only because this whole day played out and everyone's been sending me messages, other people's clips. I see everyone trying to make a viral video as in to hate on GameStop. Like, ooh, GameStop wants to buy something 4 times bigger than them. GameStop wants to buy eBay. What a joke. I think this is this is fan.
It is kind of a joke. Like this is an unserious deal. And the fact that you can't realize it would not be surprising, Morantz. You have been the last to figure out a lot of things. So here we go again.
Fantasy land, and I'm going to put my hat in, and GameStop's going to give them store credit, and everyone's coming out with some type.
I mean, those jokes are
really
funny. The fact that you're such an unfunny loser. He's got this angry face. Like, look at that. He's actually pissed off. He is actually mad that people are cracking wise at GameStop. Like, dude, have a sense of fucking humor. Even if I owned GameStop, the fact that the joke was that Ryan Cohen would be buying eBay with store credit and gift cards. It is funny, dude. It is funny. GameStop has a pretty shitty retail reputation. It's funny. Laugh a little. Stop being an uptight shitface.
Breaking it down, like how this actually works, whether it be a LBO, leverage buyout, or it would be a corporate rating, as in you just take over the core of the company and you gut it that way. But if you're going to make a true offer for GameStop, there's a couple of things that are happening, that has to be happening in the background that people are not talking about. When you look at GameStop, first thing is, and I got to go to it. Give me 1 second, guys. I wasn't prepared for this because it just hit my brain. This is all live to you. Let's go look at GameStop really quick. So here's the chart for GameStop, and you see 2653. And if I were to put it on a monthly chart, you would see that GameStop is currently trading at this point right here.
Wait.
Well below
can you put that chart back? Thank you. Right there. Right there. Are we fucking serious? Are we fucking serious on that price prediction there? GameStop next platform? That is like so divergent from the rest of that chart. Like, is he just doing like the ants trade thing where he just like copy and pastes the previous like thing, like the fractal stuff? And so, well, we had this big leap here. So obviously there must be a big leap up into here. Like, what the fuck are we doing here, bro? I feel sad that his analysis is this good for current shareholders. I know, right? Like, you were about to be made a junior partner of this company, and he is like all over it.
Been in the past, we're essentially talking very low. You had these peaks back in 2024, you had an additional peak in 2021. I mean, these massive mountains, and we found a way to settle in down here. This is a lot of the groundwork. This is where, like, Dr. Michael Burry, who's a very well-known investor, says, I like GameStop at 25. He just said this week. He said those are good entry buys. And
yeah, newsflash, Burry ain't so hot on the stock right now. Just saying. Might want to get up to date on your narratives.
Everybody is insulated. It's reinforced at $20 and at 28 and 29 via the bonds that were offered. But by GameStop allowing this bottom to really round itself out, now you're at the point where, okay, the announcement comes out. This is a trigger. And the reason why it's a trigger is because GameStop trades at 2 times book. I've told you guys this so many times. People like to just step over this metric, but you really can't. So that most people understand book value versus what you trade at, the multiple of. That I've been seeing on the S&P 500, around 7 is the average, 7.5, 7.7. But most companies, just a rule of thumb, traded around 10 times book.
What? What? Like, maybe in the tech sector, the average is like 10 times book. Average price to book ratio can be skewed higher. In a 2021 study, average price to book was 4.59, while the mean price to book was lower, close to 1.79. The historic average is between 1.5 and 4 times book. So you are so fucking way off, it isn't even funny. Trust me, bro. Finance facts brought to you by Marantz Rants.
I'll give you an example. eBay. eBay trades at 10x book. So what does that mean for GameStop?
eBay trades at 10x book because like it has revenue growth. Like, look, pull this back a bit because we don't need that big there. But like the reason why it trades at 5 to 10 times price to book is because it consistently has growth. Like that's something that like I know would confuse someone like Marantz, but like this is a company that's growing top and bottom line. There is future growth up here that justifies future growth down here. That's why it has such a premium to its book base value, because the company's growing. GameStop is not growing, and that's the problem. That is the problem here.
Well, GameStop trades at 2x. So if GameStop were to be given the same measurable, I'm so sorry.
If anyone starts their analysis with book value run, unless book value is less than market cap, or market cap is less than book value, sorry. Yeah.
If they were to be given the same measurable, then you would have to trade them at around 125 a share. And this is based off a lot of things. This would be based off the fact that GameStop's a $10 billion asset company versus eBay that's $17 billion. Is that really that far? Are we far? $7 billion? Okay. Well, here's the thing. You can leverage your $9 billion of cash and go get another $9 billion. The bank.
That's not how that works at all. That's not how that works at all. Because you're using the cash to close the gap. It's 25 and 25. Well, actually, it's 27 and 27, roughly. And he's got a $20 billion loan. That means $70 billion in cash is getting slugged in on that half side that isn't being paid by equity. So like that, like what is it? Like $9 billion in cash and cash equivalents that GameStop has. So you have $2 billion left. Like that's part of the collateral for the loan, my dude. The collateral is the business and the balance sheet and the future cash flows paying that interest and that principal. Like, oh my gosh. No wonder this dude lost his shirt gambling. He thinks that you can just like cash on the balance sheet is like some infinite money glitch when it comes to loans. You fucking idiots.
We'll give you $9 billion for $9 billion every day of the week, certainly when you make profit. So GameStop's not far from eBay. It's very easy to get there, whether you do a bond offering or you have other investors that want to get involved. And that's what I want to talk to you guys about. That there's this thing. Who was it? Michael Burry. Michael Burry put out a post and he said, "I wish it was more than just eBay." I'm here to tell you, it is more than eBay. I feel it's more than eBay.
They are absolutely too leveraged up at this point. There can be nothing more than eBay because they are too leveraged. That's why Ryan. That's why Michael Burry left. Like this company is like the cognitive dissonance to be crapping on AMC investors about their dilution and their debt and all this shit when GameStop is like, right now they're afloat if the deal goes through and everything, but like this, like you can't see how hypocritical this sounds coming out of your mouth now. Like this is fucking stupid. And I know this is from like yesterday, but my God, dude, this is idiotic.
Structured my mind to look at it. I'm going to tell you the difficulties that the concept that people don't have. 20 years ago, you want to find something to give you backing and money and everything. Like think about what Ryan Cohen had to do at Chewy. He had to go and do a deck, right? He did his little deck presentation, and when he puts out his deck slides, he puts them out, and then it's like, hey, 100 people told him no.
Well, hey, I mean, I guess they could just infinitely issue shares. Just keep the dilution machine going. Just dilute out equity holders and just buy everything you want. I'm sure it'll work out in the end.
No. Then you had Larry Chang, 100 and whatever the number was, finally gave him funding of around $10 million to start, 15 after. So you go, okay, man, this guy got started, $15 million seed money, and while he was already operating, already big, but they gave him more money to do what he's doing. And that's how it used to be. You had to knock on 100 doors to finally get somebody to help you and go that route. Guys, that was 20 years ago. That was 15 years ago. We're in a whole new world. I'm gonna tell you why. Because when I grew up, like a lot of you guys my age, we couldn't just go to the internet and have friends to play with. That's not what it was. We had to walk street to street, door to door, and knock. Are there any kids here that want to play outside? We'd have to do that. Then think about it from the investment standpoint. Ryan Cohen and the rest of these investors in the whole free world, they had to go knock door to door to go ahead and say, how can we find funding? That's not the case anymore. Now you can go online and you get some. Case in point, Nat Turner. Nat Turner's at GameStop. Well, he's on the board of directors, but he doesn't own any shares. And I've always asked myself, why doesn't he own shares? He's not allowed to. What is the deal? What's really happening here? Is there something that they're doing behind the door? When you say a potential offer, is it just GameStop? Is collectors not in this environment? And I'll tell you why, because I went ahead and looked at ownership on the warrants that GameStop issued. And the largest investor in the world on the warrants, the individual who holds the most warrants in all of America is Steve Cohen. Yeah. He's on the board of directors of collectors. Does he know something that's about to happen with GameStop that no one else does? Is that what they're willing to make a bet on from now until October? Thought about it another way. I thought about cash. I thought about money. And I thought about the odd man out. There's two guys that I haven't seen on the GameStop investment side or anyone talk about them. It's Mark Vadden. You guys know that. And Michael Day. Ryan Cohen built Chewy.com. He had a mentor. You don't get to pick your mentors. It doesn't work that way. Or you know what? You get to pick your mentor, but it's at what point do you choose to receive that info from them and embody it? Because that's what Ryan Cohen's doing. He's doing exactly what Mark Vadden said that you should do in these situations. But GameStop has all these board of directors, they have all these investors, and they don't have Michael Day at all. He's the one guy that's not even being looked at, nor Mark Vadden. But I say Michael Day for a reason. Michael Day is one of the 3 founding fathers of Chewy. He was with Ryan every day for a decade.
What does this fucking matter to anything? All right, I'm done with this video. I think we've absorbed as much stupid from that as we can. Let's go with this. Offset the flow. Okay. Let's see about this one.
All right, guys. So I want to go over something, a talking point that just came out of live stream. You guys know GameStop announced their proposal to buy eBay. Everyone's very excited. You understand all the metrics of it. You understand the dollar amounts and how it all fares out. The one thing that someone asked in the chat right now after the show was over. So if you guys didn't watch the live stream, I want to encourage you to go watch the live stream. It was very informative. We all talked about this for the last 2 hours.
Sure it was.
And brainstormed every different possibility. Here's the one thing I do want to tell you that's going well in GameStop's favor. So GameStop is going to offer this amount, half cash, half GameStop shares. And the dilution would equate, let's just say GameStop's $30 a share. That'd be 900 million shares added to the float, essentially doubling your float, if not more, right? Let's just at that price point at 30.
At current price, it's more like 1.2 billion shares. Where did I put that? Hold on. I know I still have that tab open. I've just got to find it. Bink. There you go. Okay, I was a little off. 1.14 billion shares as of close today.
$1 a share. I think GameStop will be worth more than that if this deal goes down. But the part that no one's talking about is that eBay is 95% institutionally owned. Therefore, who's going to own GameStop at that point? Everyone's going to own GameStop. But is it going to be a dilutive factor, enough to dilute Ryan Cohen in his ownership of the company? No. Ryan Cohen put...
Absolutely it will. It will dilute all you fuckers. I mean, that's the part that I discussed at the beginning of this live stream. Remember, the amount of dilution we're talking about here... Let me switch screens real quick. You're looking at this right here. Current GameStop shareholders, whether they be retail or institutional, go from owning 100% of the company, this includes insiders like Ryan Cohen, to owning 27% of the company at current potential dilution. Like, yes, this will affect Ryan Cohen's ownership. It will affect all your ownership. Whoever is buying the 1.14 billion shares needed to make this deal close owns this company. Not you, not Ryan Cohen, not Marantz Rants, not Michael Burt. Well, I mean, he sold already, so that's kind of unfair. But like, whoever buys these shares, whatever consortium, if he dumps it on the market, whatever Ryan Cohen does, that's who's going to own GameStop. At that point, all y'all cease to own GameStop. Sure, Ryan Cohen would be the CEO at the end of the deal, but whatever group of investors buys that other 72% of the company runs the show now. Period.
In this special consideration for 17 million shares for every tranche they hit, 20 billion, 30 billion, 40 billion, 50 billion of valuation. So when this deal comes out, initially you're looking at around 60 billion and 70 billion worth. So you would look at Ryan to have anywhere from 68 million more shares or all the way up to 90 something million more shares, depending on how you do your math. But that means he's
which is nothing. That's like a drop in the bucket. Like, what is the max out? I got this around here somewhere. Let me find where I put it. Like, the max amount out of this deal that Ryan Cohen can get get out of shares is 171 shares. Like, okay, let's calculate that in. Let me go find that again. Like, the float at that point will be this right here. So it's really simple here. Let's get Ryan Cohen's. 1 second. I got to do correct math here. 1 second. So right now, Ryan Cohen owns 42 million shares. All right. 42.1 million. It's 42.11.111. All righty. And then we add in the rest that he gets from his share compensation, which is, if it fully turns out, all of the tranches, which he won't get immediately, but let's, just for the sake of the argument, we will give him all of his tranche of his shares. And then we divide it by this gargantuan number. That's still like 13% of that current float. And that's even before adding in those shares, because they would be added to the float. Like, depending on how the ownership is of the new 72 shares is broken up, and if those two people want to work together to control the company, or if they want to be subservient to Ryan Cohen, you'd have to think you'd want people subservient to him. But sometimes to make the deal close, he might just have to deal with the fucking fact that these people are willing to give him money, whether he likes it or not, to make this deal close. That's why CNBC was asking, hey, so where are you getting this? Who's buying this equity stake? And I can get the other end of it, that Ryan, if he has it set up, doesn't want to tilt his hand and show it yet. Because, this seems to be an entire game of chicken, as most like hostile takeovers are. But that's something you got to consider. I'm not saying that you have to sell. I'm not saying that you have to hate GameStop or Ryan Cohen, but you need to think rationally about all this and stop listening to people like Marantz, who are like just like selling straight up copium, even if he got the entire stake. So let's even add, because this would be dilutive, so it would add to the float. We can do that. That's not hard math. That's 12%. His ownership would be 12%. Now, these two numbers would also go down in response to that, but he would, like, Ryan Cohen would be the CEO and still a junior owner too. Like, this are the people, whoever this is, that Ryan Cohen has not told us yet. Maybe he doesn't know. Like, maybe he hasn't found these people yet. Maybe he has. But whoever that number is going to be controlling GameStop. And anyone telling you otherwise is full of fucking shit.
Still going to have 1/10 of the company of the dilutive form. So they already set this up perfect. Here's what I'm concluding from seeing.
Right, yes, he will have 1/10. But, like, the shares he sells to make this deal happen constitute 70% of the company. Fraction form, that's 7/10. Like, he doesn't control the company at that point. Like, I don't know how much more I need to say. Well, it's not getting through his thick skull, so the best I can do is talk to you people, and hopefully it'll resonate. But this fucker's lost.
Seeing all the moving parts. And whether you want to believe it or not, I mean, that's on you. But I think Ryan Cohen, by having the compensation package the way he does, I think he already had factored in. That's why I said, where did they get this number from? Where did they get this 171 million shares that he would get? I think it's something like that number is 170 plus million if they were to hit all these numbers and the metrics. And I'm thinking to myself, well, they're using this multiple. They're using the fact that they were going to try to buy eBay with this dilutive thing. So if that were the case, they already factored in all that math to where Ryan doesn't lose ownership.
I really don't think, like, when did that deal go in? So he did. Well, again, like, even if he did, again, it doesn't get him there. Like, sure, he's going to be one of the insider owners with 10%, but, like, that only works if, and again, we have to guess because he hasn't said, he barely has said much about the plan anyway. Like, I discussed that earlier in the live stream. Like, the only thing he needs to prove to eBay is that he can get the money to pay them, and they have to decide if that is a good value for what eBay is currently and its future cash flows. If they want to take that, and the shareholders can say yes or no, and the board can say yes or no before that. That slideshow was to prove to GameStop people, hey, I'm buying this. This is the company that I want to do. And I get most of GameStop people are retail investors. So having a big, intricate, deal structure about where everything's coming from doesn't help anyone. But at the very least, spend more than a sentence on certain things. Explain your what you're doing here. It just feels so incomplete. And it just feels like he knows that whatever happens, that people are just going to come along for the ride, at least on the GameStop side. So he doesn't need to explain shit. And that's bad corporate governance. That is just bad that people would accept that. And again, that doesn't mean that you don't have to trust Ryan Cohen. It doesn't mean that you have to hate investing in GameStop. It's just have some better expectations of people who are responsible for your financial future when you invest in a company. It just befuddles me, like, just the crassness. I mean, maybe he'll explain it in the future, but it's just
of GameStop, a controlling stake. So there's not enough ownership by any random person, Vanguard included. No one has enough to swing Ryan out of his position. It only amplifies what he's doing.
But it's not Vanguard you have to worry about. It's about whoever is buying that 71% stake, or what combination of people are buying that 71% stake. Retard. Fucking, like, is simple math hard for you? I mean, clearly it is, but...
So, to answer that question, because it was just asked to me in the chat in one of the messages, I thought it was a particular question, and it makes a valid point. But let's add in all that DD with the live show I just did. Go watch it. I'll see you guys around. You guys get it now? Ryan's been planning this for a long time, and they did well. And it's still going. Peace.
Oh, sure.
All right, guys. So I want to go over something, a talking point.
Absolutely. I don't know. There's too much unknowns right now, and it's just silly to think that this is just the best deal. Absolutely silly. What time is it? Oh yeah, we should probably have plenty of time for this next stop. One sec here. Amy wanted me to let her know when we were going to start watching the interview. I don't know, maybe we will. I'm just going to pop it up real quick. I want to check something before we get started on that, because James Fishback had his deadline today. I want to see if he actually fulfilled it. Ein Moment. Did James do what he was supposed to? I'm going to bet he didn't. But we'll find out together if he did. Oh yeah, I've got to update it. 1 second. You guys don't need to see my password and stuff into Pacer. Not like if you had my Pacer password that it would be, world ending. Nothing. All right. Well, he's got till midnight Eastern time. I suppose we can do a check on that before the end of the show. Big yikes for him though. Okay, so right about here, I'm betting. All right, let's take a look at Amy. I didn't get to watch this during when it was live, so we're gonna take a look at this and see how things went. We're probably gonna save the John Burda stuff for Saturday.
I want both sides to be heard. And Junk Savvy, who I'm friendly with, and I'm friendly with her and Busy. I like them both. All right, I didn't get a chance to talk to them this weekend. I think they think that's nefarious. Were we a little busy this weekend, Isaiah?
I know, math is just so dangerous. Those evil maths. Evil maths.
Would you call it busy? Was it like 18 hours a day just trying to get set up and get into town?
Rob left his microphone at home.
Left my microphone at home. We had to go new microphone yesterday. The whole thing was just an absolute cluster, if you understand what I'm saying. Okay, but we got it done. I didn't have time to get into long conversations and even have my mind able to absorb them. So I think they thought something nefarious was going on because I put forth a debate. She said she wanted the debate. Right on screen, didn't she get into the chat and said, "I'll debate her" or something like that? I can't remember how it went. But then
that was in the X space where you were on, and she said to book the debate, and you asked if Monday would work, and she said just book it.
Right. So I'm thinking, okay, I'm booking a debate. I make a public declaration that we're going to have the debate today, Monday at 10 o'clock. And then for some reason, I think they thought I had nefarious intent. I'm like, I've been working for you guys for a full year. What do you think has happened? I don't understand it. But they started taking.
Here, let me help you out there. Let me help you out, Rob. The cult does not like dissenting voices. They want only their narratives to be reinforced and reaffirmed. I tried explaining this to you, bro, but you're dealing with a cult. My best advice to you is to read Stephen Hassan's book, Combating Cult Mind Control, and start brushing up on the bite model for how these people operate.
Not them two, but just the people within the community started taking shots at me that we should not even, as they put it, platform Amy. And I'm like, platform what? In a debate, that's how you find out whether somebody's lying or misleading you. That's the whole point of a debate. That's what they're for.
Yeah.
Why would that hurt you? If you're right and she is wrong, wouldn't that come out in a debate? Everything she says, you can counter. Right? Yeah. Isaiah, I don't understand the argument. I really don't.
But that's the thing, is these people don't have the truth and they know it. It's all a narrative. It's all lies. And that's why they are so fucking scared of a debate with Amy. Because they know she would crush her.
TLP people.
Or,
I come from a different
crush
world than
busy.
you. I come from the world of you challenge people that
It's like the
call you
Israel
out and lie about you.
situation. We could have silenced Casey and not put their comments on the screen, right?
Perfect example. Perfect example. Casey disagrees with me, thinks I'm crazy, as a lot of people do, and maybe they're right. Who knows? Okay, I'm just giving you my opinion. You can make up your own decision. Casey, I value your opinion. I just think that you're looking at it through the wrong lens. Okay, but that's what happened, and then apparently we did not. Now they tried to get a hold of me. I don't want to mislead anybody. Both Busy tried to get a hold of me. Junk Savvy tried to get a hold of me. I just couldn't get back to them. But all I wanted to hear from them was confirmation that they were going to be on today. That's all I needed to hear, yes or no. And I didn't get a confirmation, so I said, you know what? We're either going to have to cancel this thing. Amy's going to have to come on by herself, or we're going to have to find something in the middle. So ultimately what happened was John Berta called me. He said, if nobody else will do it, I will come on and debate Amy. And I thought that was kind of unfair, right? Because Amy was supposed to be debating Junk Savvy.
A retail investor, yeah.
Yeah, it just felt unfair. So I said, you know what? We'll have Amy on first, and then we'll bring in John Berta at 11, maybe 11:10, 11:15, because we're going to give her a full hour. And that's where the situation lies. We've tried to get all this information out on social media.
I did DM Junk Savvy too. She said,
we tried. I think
I tried.
They don't want this.
And she ghosted him
because I don't really understand why. I guess they just think that Amy shouldn't have the ability to speak publicly and should have to.
Yeah, because that's how cults operate. They silence their opposition. That's why I have several videos of these people going around basically saying how they want to destroy our personal lives. They want to get us fired. They want to harass our friends and family. They want to make it impossible to live. That's what cults do. They are a cult. They have their beliefs, and they're absolutely fucking insane and are not based in any way in reality. And they know it. So the only way to protect their fantasy land is to attack people that they see as their perceived enemies. So you having Amy on makes you an enemy by product of having Amy on, because they're that afraid of her.
Sit in a closet for the rest of her life and talk to her friends and family, and that's it. I guess that's the way it works. I don't know. I don't see it through that lens. Bring in Amy if you don't mind. Amy, what's going on?
Hello, good morning.
You are a troublemaker, Amy. I don't know what's going on with you, but one side of the equation hates you and does not think that you should have the ability to speak openly. And I want to understand what's going on. So if you don't mind, just very quickly, from your point of view, what is the argument about between these two sides? Because when it first started, people on that I guess are supportive of you and come from your mindset were just trashing me over and over again, and I didn't really understand why. So I was trying to figure out where's the fight? What's the fight over? What does your side think versus the other side? Why is there no just we can agree to disagree? Why is it so volatile at this moment in time? And what is the fight over ultimately?
Muted.
You went silent.
We can't hear you. Okay,
this happened to us the other day.
Okay, let me remove you. Add you back. Let's try that.
Amy?
Here?
Nope, she's silent.
No.
Oh, no. I've had moments like this before.
Try now.
Welcome to doing live.
It's been bizarre the last few days. Maybe text her or get a hold of her and tell her to go out and back in.
Yeah.
Greg McCabe is trying to sabotage his live stream. I only kid.
Go off talking with any figure it out. It's on.
We read.
Well, I can't figure it out. But question for you is, what is this fight over? What's the fight about?
So I think like on one side, like we read the filings, we read, the court cases, we read, we basically just like read all of the information, and our story doesn't align, or what we read doesn't align with what they're talking about. And that's really all it is. And then it's become some like infighting. There's shareholders on our side too. Like this, our side, their side thing is kind of silly to me, but that's because I'm an adult. But and they just have different questions, and they don't fall in line with the same narrative, and so it becomes this,
very volatile.
Like bulls that lock horns, and yeah.
Yeah, they say that you're one of the arguments against you is that you're not a shareholder. Why do you care?
I'm not a shareholder, and I've never claimed to be a shareholder, but you know, I don't know what everybody's experience.
I hate this question so much because, like, who cares? It's an irrelevancy. Like, I talk about politics all the time. Sometimes politics on matters that like have no relationship to me. I talk about stocks all the time that I'm not invested in. Sometimes it's to determine if I want to invest in them or not. So what? What does it matter if I'm a shareholder or not? As if, again, this is just trying to gatekeep the discussion, trying to make it so that certain people cannot can't have a discussion about the matters at hand, as if somehow you have to be part of this cult to be able to have a say on a subject. Sorry, that's not how that fucking works.
In the market, but I've gotten taken in by like social media hype, because I think social media has completely changed the landscape of investing. Like, there's always been Yahoo chat groups and, you know, chat boards and things like that that
up a little bit
drag people into, you know, maybe not the greatest investments. But social media has really changed the game because it's a lot of information really fast. It's a lot of people talking as if they're experts and they know exactly what's going to happen, and they, you know, they make it appear like they have some sort of insider information, or that they have some sort of connections with people who are giving them information. And I think it's changed the landscape. And I don't even think the SEC and the regulators have really caught up with how the landscape has changed as far as social media investing. I think they're trying, but they're behind the 8 ball on it. And so I really just kind of try to give real information and information from SEC filings and court cases. And like, that's what our show is about, right? We follow court cases for companies. And, you know, this kind of started for me like with AMC, and, you know, I saw an inordinate amount of insider trading. And I mean,
again, why does that fucking matter? Okay, I'm gonna drop here so you can see the whole wrong one. So you can see the whole comment. It's like, who cares if she's a shareholder or not? Again, it's fucking irrelevant. It does not matter. You know, like, we talk about stocks on the Saturday show that we are not investors in all the time. Why does it matter? All it is a tool to silence people, to silence discussion, because you don't like what the discussion is about and you want to be able to shut someone up. You're not a shareholder, so you can't speak. Fuck you. I'll do what I want. They extricate shareholders that do own shares if their opinions. Yeah, like as if like you having shares gives you a right to speak. As Tony said, like, they'll excommunicate you even if you are a shareholder just for having the wrong opinion. So not only is this a complete red herring, it's a fucking lie, because even if you are a shareholder, they'll just shut you up.
Sold close to $1 billion in shares on the AMC run up. And so every Friday, because it seemed to happen like clockwork every Friday. So every Friday I would post, it's AMC insider selling day, and I would post that they're selling, right? And that's sort of how it started. And then they started to get really mad about that. And then, you know, I kind of saw this sort of hive, culty sort of atmosphere forming around these meme stocks and things like that. And so, you know, now I do a show about this and so on and so forth. So it's not like I have no connection to it. I mean, I engage on financial.
I really am glad that Amy is trying to set the groundwork that this cult meme stock mentality is not just MMTLP. It's a whole list of tickers who all act and behave in the same way. Not all of them, mind you. And depending on how bad the stock is, it can be, you know, much more hostile, like MMTLP, like literal bomb threats. But you could get, you know, a group like GME where, like, for the most part, you can have a rational discussion with most of the GME community. There's only certain amounts of the community that you can't have that discussion with. I mean, we have Platinum on every Saturday. She's a GME holder, and we can have rational discussions where she's even wholly and fully forthright that some of the arguments in her community aren't necessarily the greatest arguments, like the discussion with Running with Bears and her about, you know, I'm all right with the Ryan Cohen buyout because at least they're doing something. And Running with Bears responded, well, then why don't you just buy eBay? And she's like, that's a fair argument. Like, Like, you can have rational discussions with some of these people. It's not everybody, but obviously the more toxic the stock, the more toxic the community, it seems. And I'm glad that Amy laid out that groundwork. I don't know if Robb, well, we'll see. We'll see if because it's widening the door real fast, because you're going from talking about MMTLP to saying this is an entire network of bad vibes going on.
Twitter, and I do a show about meme stocks and things that
What do you think they're getting wrong? Like, when I'm looking at this, and somebody pointed out the other day that I'm not a financial guy, and I'm very upfront about that. I'm a radio talk show host. I used to be an executive in the shoe business. That's it. I'm just a very curious person with a background in broadcasting, and I went to school originally for journalism. So I just try to weed out the truth. That's all. And I was trying to tell the people on the MMTLP side, I'm the kind of guy you want, because you have to explain things to me. You can't speak in circles to me, because I'll just go, what are you talking about? I understand. You're gonna have to go down. What is the what do you think the MMTL people principles have wrong? Like, for example, Busy Brands and Junk Savvy, they seem to be kind of the leaders of that group. They're the ones organizing the space conversations and so forth. Sure. What do you think they're getting wrong?
So their main focus is on the regulators and on the SEC and FINRA, really, mostly, right? And they tend to leave out all of the things that happened leading up to this, including, that PS1 fully informed them that the stock was going to trade, that it was going to, they have no intentions of paying a dividend, right? I mean, like, Junk Savvy is even arguing that this wasn't a dividend, right? That the MMTLP to NextBridge wasn't a dividend. And it was, in fact, a dividend. It was a pro rata dividend. And it was explained to them in the paperwork that they would either get in the filings, that it would be a cash dividend, because when they had the Series A preferred, they were the owners of the assets, and they were entitled to a cash payout if they sold the oil and gas assets. The very important part of that statement is, or a pro rata dividend, which pro rata is Latin for in proportion, to shares in a spinoff entity, right? So what we have, this is
I like that Amy is trying to break this down and explain it bit by bit. But if I was in that situation, and it's very easy for me, armchair quarterbacking it, half the day later. But if I was in her position, I wouldn't have gone into that detail. I just would have said that, Busy Brands is trying to say that it wasn't a dividend. It was a dividend in the filings. Everyone was calling it a dividend. They said that they were going to get cash. They never got cash. It was marketed by the company as they would get a cash dividend. But the other end of it was the spinoff. And that was always what it was going to be. They knew in advance that there were no buyers for this assets that later got marked down to zero. But everyone, from the grifters like Busy Brands to the company insiders themselves and the people in the C-suite like George Palikaris and John Berta, were marketing it as a cash dividend when they fucking well knew it wasn't. That is the whole scam in a nutshell. And that's how you lay it out. They knew that these assets were not worth what they were selling them as, and they lied. Whether that was, well, I can't even say that it was, that it was by ignorance or negligence. They knew that there were no buyers for these assets. It's there in the SEC filings. They knew they had no buyers and that they were going to make this a spinoff entity. Yet when they got online, when they got in front of investors, they said it would be cash dividend. Remember the whole, we're going to be getting these like $5, $10, $15 per share on this dividend. But, NextBridge is my stop loss. It was an afterthought that this spin out would happen. Everyone thought they were going to get paid out like they were going to be gorillionaires. That's the scam. And I get Amy's trying to explain the nuance of it, but you really just have to cut down to the scam was they said these people would get money. They got fucking nothing. Period. That's the easiest way to say it. John Berta and these internet grifters told people they would get money, and they got fucking nothing.
Coming from the SEC's case against John Berta.
And I'm not trying to be like, that's more mad at the situation. I'm not mad at Amy. I'm just saying this is a despicable thing and should be called out as such. I wanted to make that clear because I know I got kind of angry voice there, and it's angry voice because this was a complete hustle and a scam. And it pisses me off that people continue to try and pull the wool over people's eyes as to what a scam and a hustle this was.
6 weeks after the merger,
Sue me.
A bunch of things happened in between there, right? Like there was a whole almost like C-suite setup that was being paid to a third party. That this is all coming from the SEC. I mean, I can pull up the complaint.
You can go anything on the screen if you want. We have time. I want to ultimately what I want to happen is I want people that would have no understanding of this to have some understanding of it when they leave. That is the whole point of what I'm talking about. You know,
yeah, and that again is I get where Amy's coming from. She's trying to explain a complicated issue and break it down bit by bit. But what do you unfortunately what you have to do in a debate like this, especially when you have a set time period, is like, and it's hard to come up with it on the spot, and it's hard to come up with it even if you have notes. But the simplest way to say is they were promised a spin out or a cash dividend, but no one really talked about the spin out part of it. Everyone was saying you'd get cash, you'd get cash, you'd get cash, you'd get cash. We got someone who's going to buy these oil assets and you're going to get paid out. And they knew it was a lie. They knew it was a fucking lie. That's the long and short of it. I covered their about assets value live a month before the 2022 MMTLP run-up. Got blocked by everyone. Yeah, the truth. The truth hurts with these people. They don't like the truth. The truth destroys their lies every time, and they hate it.
Sorry, if you have to sometimes I take a left. But
okay. But if you have paperwork, you can show him. That's what I'm saying.
Sure. We look at things holistically where they are laser focused on regulators, right? And leave out the fact that, that where I was going with that is that, so the merge happened, and then 6 weeks after the merger, I think it was, according to the complaint, it was John Berta who came in and told Meta they don't want to sell the oil and gas assets, and they are going to spin it off. And the board voted on it, and the board agreed to it, which fine, that's what happened. So it was then that,
yeah, I would have been clear that they were fine with it and voted on it because there was no other decision. There was no other option. No one wanted to buy these assets because they were practically worthless. That's why they had to get marked down to 0 after the spin out was over, and why MMAT was already considering them a big fat 0 on their books. Like, that's the thing. You have to read the complaint of SEC versus Berta and Palikaris, because it lays it out right there, clear as day. They knew what the assets were worth. They had no buyers. They kept telling people these assets are worth millions upon millions, that you're going to get a huge dividend when this is all done, and it never fucking happened.
It was decided 6 weeks after the
hammer it home, because it's the truth.
But then comes this push later on of we're gonna torch these shorts, and we're gonna get all this money for this dividend. You've got a lady in a bird costume telling everyone they're gonna get a $30 and $40 dividend, and all these people on social media.
Explain that, because that is something that we explain that real fast, because this is something I've heard. I think somebody sent me one video way back when, and I think what the argument is, and I don't know what this means in the totality of the conversation, but there were people out there trying to push a narrative, and this woman went by nicknamed the Bird Lady, where apparently they're trying to sell people an idea that's not realistic, but they're selling.
Yes, that's it. That is exactly it. And there were people online selling people on this idea, but it wasn't just the people online. It was the C-suite people and the insiders involved with the entire transaction that were lying too. It was a human centipede of lies.
And that was pushing these people to try to squeeze the shorts, I guess.
Yeah, well, I mean, and the whole short squeeze theory happened actually, like, you can go back to Torch, right? And
oh my God. Sorry, Amy. We're gonna take a side quest for this stupid fucking question. Why does she care so much about MMTLP? 'Cause we don't like fucking fraudsters. We don't like your fraudster CEO, and we don't like that you continue to lie to people online. That's why we fucking care. Non-shareholder, small no-name company. Her interests make no sense. What, again, why does it fucking matter? It's not a legitimate question. It's all about silencing and minimizing Amy's speech. It isn't anything directly addressing her arguments. It's all attacks on her. Why does she care? Look at the fatso. All this stuff that's directly attacking her, because they cannot argue on the facts because they have no fucking facts.
Before the merger. And, I don't know the connections, but you had a group of guys from Atlas.
Unless she's incentivized to care.
You can
just let's add to the ad hominem attack that she must be a paid shill. Like, fuck off. Seriously, fuck you. All this is trying to minimize Amy's arguments.
Disagree with my how I see that, but I think that Atlas was a pump dump. They're actually being indicted or they've been indicted, and it went to appeals court and it got kicked back, and so now they're about to go to trial again. And they were pumping the Torch merger, and so I think a lot of people got into Torch then, and then when the merger happened, they got the MMTLP dividend, and then so there's already this sort of fervor and crowd around it, and then the spinoff comes, and they're all the YouTube channels are talking about it. You've got I mean, you name it, Tony Twits, Houston Wade, like there's a ton of them, like influencers, right? Who are saying they're going to get, well, I mean, I think you have audio of one of the CEOs saying that 20 was a low number and it's going to be somewhere between 30 and 60. You've got someone on X saying that they're going to sell the assets for $19.3 billion. And you've got, I believe it was John Berta who said, we have 3.2 billion barrels of oil that the world desperately needs. And then we see filings that.
Boom. There you go. There you go. Hitting it.
Oil.
Bingo.
And that happens, and 2 weeks after the spin out, they write the assets down to zero.
So your argument, I think, is that there was complicity with the CEO.
I'm not saying a lot, but the story is like very.
That's all right. We'll slow it down. So one of your complaints is that you believe the CEOs, George Palikaris and John Berta, were complicit in this situation.
Absolutely, yes. That is the core of the issue, Rob. The whole FINRA and the market makers and the SEC and all this, it's a distraction that was started by the people close to the CEOs who did the actual illegal behavior. They lied to people and then spun up a story to protect themselves from the angry mob that would have came for them with torches and pitchforks. That's what this is all about. People who are in a cult making a make-believe story to not have to deal with the fact that they were conned by the people that they should have been able to implicitly trust, the operators of the company who are their fiduciaries and should have their best interests at heart. Fucked them. That's the problem. Everything else is bullshit.
Am I getting that straight?
Yeah, I do think that.
Okay, let me ask you this, because this is something that I don't quite understand. A reverse merger for me, I didn't know there was such a thing, right? So I'm an infant in this conversation. But what they explained to me, and one of the reasons it caught my attention was they said that 2 market makers were able to get a stock ticker running. And when I talked to when I interviewed John Berta the first time, he said, Rob, I was traveling. I ended up, people said, hey, your metamaterials is trading. And he said, what? And he pulls off into a hotel. He was traveling, and he said that they
this story
wrong
is
information, old, outdated information. And 2 market makers, I believe in Canada, maybe, if memory serves, were able to open up, I think it was Canada, maybe, they opened up a stock ticker against his wishes. And that to me,
this is one of the most horseshit narratives ever.
This is where I get into it with the regulatory bodies, because I don't know how you can open up a stock ticker legally. Even if it's legal, it shouldn't be.
Yeah, I'm going to wait to see how Amy responds to this, because this is a very complicated issue for someone who has no understanding of financial markets. I have an idea of how I'd try to analogize it, but we'll see here.
Is what I would say. How do you open up a stock ticker for something that the CEOs and the investors don't want to trade? How does that even work, and who were they? I've been trying to figure out who these 2 market makers are, and I'm thinking 3.5 years later, other names should be front and center in the conversation. Do you know who the 2 market makers were?
No, I don't. And I think that that FINRA has a different story, right? So what FINRA is saying is that there was an unsolicited transaction, right? So there was somebody who had shares who wanted to sell them. They went to their broker. They said, I want to sell my shares. Can you find me a buyer? And there was a buyer found, and like nothing happens in the dark, regardless of what folks like to think. They don't. This transaction had to be documented. And from a sworn statement from George Palikaris, he said that they were actually informed the day before. Like, this is a statement on October 6, 2021. Mr. Greg West, a senior corporate action analyst at the FINRA, sent a basic for your information email to Meta2 that notifying the company that they had signed the ticker symbol MMTLP to a Series A to the Series A stake shares, and the MMTLP shares may be quoted and traded on the over-the-counter market. So what? Did that just take me out?
No, you're good. You're good.
It was just frozen for a second, so I just didn't want it to be frozen on your face.
that was a sworn statement from George Palikaris that they were notified that it was going to trade on the 6th. But so for this trade to take place, right? So what I'm guessing what FINRA said is they already had.
Yeah, I would have just narrowed that down. Like, unless you have the sworn statement, you don't need to like directly quote it. I just say that there's a sworn statement. If you can produce it, you can. If not, tell people where they can find it. at that, and I would just cut it down to that, George Palikaris was notified that it was going to trade. And the fact of the matter is, and I get the feeling she's going to get to it, I would just simplify it down that they originally got a QSIP for this. Like, obviously they've learned their lesson now with NextBridge. They haven't gotten a QSIP, and that's why it can still trade, but it can't trade on open markets. But like when you get a QSIP, like I was just trying to explain it on X before I went live, that like it's like opening up an eBay listing and then being surprised when people solicit bids. Like that's the entire situation here. A QSIP is an identifier of a security. And once you've identify, put an identifier to a security and securitized it, it's tradable. It's like any other commodity. If I sell you a baseball card, there's nothing stopping you, or even if I just give you a baseball card for free, there's nothing stopping me from trading it. A QSIP just makes it more liquid. Technically, you could sell shares in gray markets. Like think of a company pre-IPO. Think of a company that, offers private equity stake based on the valuation of the company, like SpaceX before this IPO decision. You have inside investors that, Series A, Series B funding, Series C funding. They get a stake in the company. And when it IPOs, they'll get shares equivalent to their stake in the company based on valuation. Those are shares in the company. And that's a private company. And you could, you could trade or sell that interest, but there's no QSIP involved. So it's a complete gray market. You can still trade those shares. You can still trade that interest, with whoever's willing to buy it, but it's highly fucking illiquid. Good luck finding a fair price for it. It's probably almost impossible to get, an accurate pricing on it because there's no open market. It's just whoever will buy it. It's like the market for rare coins. Like the price wildly fluctuates because there's only a handful of people that are interested or have the money and the wherewithal to be able to, to buy it. And that's the same situation here. So even if it wasn't trading, I mean, you could maybe make a market for trading interests, but it would have to be some private deal, and no one's going to put up the risk for that. But once you put a QSIP on it, it could freely trade. It's like putting up that eBay listing. You were saying you're willing to sell, and now people are putting in bids, and you're surprised there are bids. It's ludicrous. Like that was the glitch in the system from the start. And, Berta and Palikaris knows that. That's why they told the narrative that they told Rob that, oh, I was traveling and, this trade suddenly happened. And then the narrative suddenly changed to my signature was counterfeited and they used old information. Well, that's up to you to prove. I don't see any proof that this information isn't what it is. You guys created the QSIP. The QSIP happened. Trading, therefore, flows freely from it through the system. And once you issue out a stock, it's like the baseball card. I own it now. I can do whatever the fuck I want to with it. There's nothing you can do to stop me from retrading it. Nothing.
Use it for the stock. So for the transaction, they had to sign a ticker. They signed a ticker, and I saw John posting about they use fraudulent information, and I looked at that, and from what I can tell, is that they use information that they have publicly available. John, I believe, called FINRA and said that's outdated, and they said, well, this is the information that we have available to us publicly, so if you want to update that information, you can give us the information, and John declined. So this transaction had to take place because it had to be documented because it took place, and that's how it got trading.
What is a market maker? Because as somebody who's a novice to the situation, it seems very odd to me that two people unrelated to the business could open up.
So I don't think it was a market maker. I think it was a broker. I think it was a broker. It was a broker. So market makers, they're basically a third-party facilitator, right? So they, like if you or I go on to our mine is Schwab, so if I go on to Schwab to make an order for Tesla, so they're PFOF, which is payment for order flow, and what?
Oh, I wouldn't have brought up. I would not have brought up payment for order flow. I would have just kept it simple. A market maker. So normally most transactions go broker to broker, like because brokers. That's why you have like half the shares trading in the dark pools. That's also broker to broker trades. So, 1 second here. Sorry. So like, with the example Amy's about to bring up, she's at Schwab. She wants Tesla shares. I also am at Schwab. I want to sell my Tesla shares. I think, good price here, going to take profits, selling my Tesla shares. Normally that transaction would go off at the best value price that is on the tape. I'd sell my shares, Amy gets my shares. But what if Amy still wants Tesla shares, but Schwab doesn't have any shares? Well, that's what the market maker is. Goes out to the other brokers or looks at its own inventory to find shares to give to Amy and take a cut. The spread. The gap between the bid and the ask. Or if there are no shares anywhere, not even in their own inventory, then they will temporarily short. They will give Amy shares until they can locate shares to finish out the trade and close out. That's basically a market maker. I mean, you could buy directly from the farm. Like there's farmers markets, but I mean, there's all like most grocery stores, I guess would be a good analogy for market makers. Your local grocery store takes a little bit of a markup on MSRP and, sells items in their store for you to buy. They are the conduit between the person with the product and you. And they take a slight profit for being the person that connects the seller with the buyer.
It goes out to the market makers who trade on alternative trading systems, which there's going to be a whole big thing about ATSs and what that is.
If there's one thing that I would critique about Amy's whole thing here is cut out trying to explain everything. Cut out trying to explain the nuance. Have ready-made analogies to be able to bridge the gap. You can give them a short explanation like I did, that market makers connect buyers and sellers. Like, say, most transactions go through broker to broker, like she explained. Market makers are there in case, those broker to broker trades break down and they need to get shares from somewhere else. And then use an analogy, whichever one you wanted to. That one was just one I came off the top of my head. Walmart is a market maker, basically. They connect farmers, the product makers with buyers. That's it. That's all they do. But you can have your own different analogy that maybe better explains it. But I think when you have discussions like this, the best way to connect is brief summation of what they do, analogy that makes it easy for a common person to understand.
And colloquially, it'd be dark pools, right? So, and all a dark pool is a private exchange. It's just not public and on.
I would not have even brought up dark pools unless he asks. That just adds more complexity to the issue.
Like the NASDAQ or.
But these went into the OTC market, right? So metamaterials began to trade on the over-the-counter markets. Am I correct?
That's right.
Mm-hmm. Yeah, famously illiquid. Not even a lot of market makers go down there because, again, like they can make a lot of money on the spreads, but like anything, when the yield is big, the risk is big.
So what a market maker does basically, so if I go make an order into Schwab will send it out, and
there you go. Amy getting back on topic. Okay, good.
The best price, right? Because their whole mission is to give you the best price. So they'll send it out to them, and then they'll facilitate the trade. So they have their own portfolios, and if they have the stock to trade at a better price, then they'll fulfill the order. So they're third party between traders, right? So the market maker will fulfill that order.
Seems odd to me, though. Doesn't it seem to you? I'm talking about not whether it's legal or it can't.
Yeah, this is why I'd have an analogy ready, because of course it seems weird. Like another example of a market maker, a car dealership. Ford makes the cars, but you don't usually buy direct from Ford. You buy from a dealership. Like there are definite analogies, and that's what Rob's struggling with. The idea of a market maker is foreign to him, and you need a reference point so that Robb, and again, not saying that Rob's stupid, I'm just saying that Rob's not familiar with market mechanics. So you need to have something that he does understand to get him there. And that's I would put that as one of the recommendations for Amy if she does another interview like this, that you got to kind of have something that gets the person to the spot that you need them to, like, get to their level. Amy is doing a good job of explaining definitionally what's going on. It's perfect. But if Robb doesn't understand the structure, the concept to begin with, he's lost. It's like opening up a dictionary and the definition uses a bunch of big words that you don't even understand. So you got to bridge them there. Analogy, then explain, or give us a little summary and explanation, and then give the analogy.
Be done. I guess my question would be: should it be able to be done? Should people unrelated to the business begin to trade stocks in the over-the-counter markets if the CEOs and the people involved in the
Yes, because once you offer the shares, once they have gone from the company to the owners, which is what happened with MMTLP, they're no longer the property of the company. Like this is the big thing that during the 2004 discovery, that, you know, or during any of these, like, you know, West Christian spoofing cases, like it can only be things that the company is directly connected to. Because once the company sells the shares into the secondary market, they're no longer the property of the company. I mean, if you follow Robb's argument to its logical conclusion, once a company sells you a share, you should not be able to trade it, because those are unrelated parties to the company. The shares are no longer in their possession. So why should you be able to trade your shares? And I think that'd be another good tactic to help Robb understand, because he doesn't understand the market mechanics. Show in pretty, you know, simple detail why, like, go to that logical conclusion that shows how his understanding kind of breaks down, and it helps illuminate the reality of the situation.
the principals in the business don't desire it. It seems very odd to me. I'm thinking if I had a business and it wasn't public, and somebody decided they wanted to make it public and trade my
Well, I see, that's the big problem. Okay, he wants to make it public. Okay,
shares, that doesn't seem very American to me. It's like I don't have control of my business now because you decided you wanted to trade on it.
But it was public, and they had already issued out these shares and gave it a QSIP. Once that property is given over to the investor, it is no longer property of the company. It is property of the investor. You sell me thing, I now own thing. It's not different than any other thing. You sell me grape, I own grape. You don't get to dictate who I sell grape to. You sell me trading cards, I own trading cards. You don't get to dictate who I sell trading cards to after. It's that simple.
Am I looking at it wrong? I mean, because again, it's the first time I've ever heard of these kind of things occurring, and I'm confused by it.
Well, so when it went to MMTLP, they got a QSIP for it, and they gave it all of the tools it needed with availability to trade. So when it wasn't trading open, but you always have the option, right? Like, so I mean, people who were holding it, if it had all of the credentials to trade, they had the option. Like, there was somebody who decided that they wanted to sell their position. Like, if you or I wanted, like, I don't operate in the private broker. Like, I don't have my own broker who's going to go sell trades for me. I operate in the public markets. But if somebody had, you know, a bunch of shares that they wanted to sell, their brokers they'll do that for them, right? And it had a QSIP and it was available to transfer. So with the DTC eligibility, so therefore you had the option to do that. You can't track people, and I mean that's what happened with NextBridge, but people shouldn't be tracked with something with no ability to sell it, and that's what happened with NextBridge, in my opinion.
What's your opinion of the charges? You know, when I talk to the MMTLP people, one of the issues is FINRA in general. They're very upset with FINRA, and I started to realize when they started talking to me how kind of strange the situation is. So FINRA is a private regulatory body, which already seems very strange to me. Quasi-private, right? Because the SEC says that I heard Gensler say that the SEC makes sure that FINRA follows its own rules.
Right.
And I just look at the nature.
They are a SRO, a self-regulatory organization that has oversight from the SEC that gets to make rules for the financial industry. Yep.
Of the setup, and I think, okay, this looks a little bit nefarious. So you have big brokerage firms and big hedge funds sitting on the board of FINRA that make their own rules, and if they decide they want to do anything that's nefarious, who's going to hold them accountable?
So I don't know that they are big, you know, people from big hedge funds. Like they're people in the financial industry, but I mean, who else would you have sit on the board of a financial regulatory body if not financial people?
Well, it's not even that they're financial people; it's that they might have some, it's a conflicting interest, if you will. If they're
I don't know that
they can U3 halt the stock, that would seem like it would be to their benefit.
But the only reason that you can U3 halt the stock is if there's like, oh my goodness, that is unpackaging that, okay? Because there was a lot of fuck ups there, and it wasn't just the company; it was the brokers themselves, and that's why FINRA had to step in. Like it all has to do with, well, let's see if Amy gets there.
If you will, especially if they're getting shorted.
Yeah. I haven't looked at the people who sit on those boards and to find out if there is a conflict. If there is, I have to imagine that they address that. But yeah, I've heard that argument too. And I just think, if you have a financial, like, so FINRA regulates the brokers, by the way. The SEC regulates.
See, I call me weird here, but I would have gone to address the whole U3 halt thing, or at least ask, Rob if I could handle it at that point, because like that would be a great way to explain that it's not like they don't have claims there. Not against FINRA or the SEC, but against like brokers were very confused, and you could make an argument for negligence. I mean, I'm not a lawyer, but in my opinion, you could make an argument maybe for negligence on the broker's part, that they didn't understand and didn't, take due caution. They have a fiduciary duty to their clients to see about getting this to better understand how this trade works, so their clients understood. But like with any dividend, even if it's the spin out weird shit, there's an ex-dividend date. The date that the stock or security trades X the dividend, where the dividend is no longer part of it. And since the dividend is the entire economic value of the security, for it to trade and possibly someone buy it post X dividend date, that's bad. That's very fucking bad. Like, that shouldn't happen. And that's why FINRA did the halt. And the halt was lifted after the company canceled the security. So, and I would actually wait before, unless Rob brought it up, to explain the further thing of this whole, like, they say that it's been halted for X amount of days. It's just a fucking lie. But that's why the halt happened. Brokers, and by extension their customers, were confused as to trading. And FINRA did not want it to trade X dividend because it would be trading a security with zero value, and possibly someone could buy a security at any price whose value is zero effectively. The entire economic value of the stock was lost X dividend and was spun out into NextBridge. So that's why the halt happened. That's the long and short of it. It's really simple. There was no economic value left in the security, therefore trading had to stop. And the fact that brokers couldn't figure this out befuddles me to no end. Like, I don't want to pretend like there aren't certain claims in there. And I definitely fault the brokers for not figuring this out beforehand, to the point where FINRA had to step in and do a halt or something of that nature. I mean, FINRA may have still needed to do a halt, but at least brokers should have been able to explain it's a dividend, and it's a spin out dividend because there's no cash value. And if it's a spin out dividend, there's no value ex div. So trading should stop. But, easy to say that with 2020 hindsight vision. But yeah, I would say that there may be reasonable claims or causes for an MMTLP shareholder to sue their broker for negligence, potentially. Not a lawyer, so I wouldn't take my advice to heart. But like, I don't want to pretend like there aren't things here that these shareholders should be able to do, because rightfully they were screwed in multiple facets. The company screwed them. The executive officers who had a fiduciary duty to them screwed them. Their brokers screwed them through their negligence. Like, there's a lot going on here. It isn't like that there isn't, there are legitimate claims. They just voiced the wrong ones.
Is to protect investors and regulate the market, but FINRA regulates the broker dealers. So I can't think of anyone else to put on a board if not financial people, like of a financial regulatory body.
Do you sense in this case, as we talked a little
bit? I'm
a
a hairstylist. I'm not going to go sit on the board of FINRA.
I got you. Naked short selling, that is the claim that's coming from the MMTLP side. They believe naked short selling played a major role in the devaluation of the stock in general. Do you think naked short selling is going on? You said that you had by broker last night.
Yeah, so if you want to, sure. Let me, I just can share my screen, right? Let's see.
I do want to let you know, Rob, we got a lot of questions in the chat that we'll go through, so make sure to leave some time.
Let's do this, and then we'll go through the questions, because I honestly,
so
I'm not qualified to ask questions. That's the problem. Go ahead. I'm sorry, Amy.
I'm sorry. I'm going to close that for a second. I don't know if it freezes me, but I'm trying to. So this is a little different than Restream. I can't.
Yeah. So if you click present or invite, or maybe share down there.
Share screen.
Yeah, and then I think I'll
share my whole screen.
You can do a window or your screen, I believe. Okay. Do you use Google Chrome?
Yes.
Yeah, it should.
But I'm trying to. Okay, then let me. So I'm trying to share a PDF, but it's not.
If you want to send me the PDF, I don't mind sharing it too.
Okay. Let's see. Let's see how I can send.
Yeah, because this is for people that are not, invested.
Send you my email in the private chat here.
They
I think I have your.
Perfect.
Sorry, go ahead, Rob. You got it.
I said that's that seems to be the underlying theme of MMTLP, is they want an aggregated share count to find out what the shares are actually worth, and they claim they can't get it. And when I brought that to your attention last night, you said, "Well, I have it." I thought, okay, well, this will be interesting because I'd like to see what the other side said.
So I have the broker audit. So they did a broker audit on 12/13/2022. Here, Isaiah, I just sent it to you in DMs. See if that works.
Yes, downloading now. Give me 1 moment. Go ahead and set it up, and then I'll just throw it on the screen when I got it.
Technical difficulties.
So they did a broker audit on 12/13, the day that the day before that they were to be canceled. And it's all the brokers, and they have and this is actually like a core function of the market. The DTCC and transfer agents, basically reconcile these so that okay. So you have to scroll in a little bit. Some of them are kind of up close, some of them are not. So it has all the brokers here, and you got all that. So like for example, you can stop right there for me, Isaiah. Mm-hmm. Can we zoom in on that right there? So this one that they complain about a lot, which is Virtue, which is going to incite them, right? Because by the way, let's get the disclosure out of the way here. So I interviewed Doug Seafoe on a Twitter space. Okay, I asked him over a tweet. He said yes. I went
Doug Seafoe was who?
He was the CEO of Virtue. He's not retired.
Okay.
And then we remain friends. We remain friends to this day. I don't work for Doug. I've never worked for Doug. I don't get paid to tweet. I don't get paid to say anything. I'm not getting paid for this interview. He's not making money off of me getting money for this interview. I talk about these things because I do a show about them, and I'm interested in the market.
How did you get Doug Seafoe on a Spaces call? I'll be curious to know how that went down. I'd like to
know that. So there was a page called Investor Turf who was basically demanding that he comes on to a space with them and show things, and like it was a really kind of ridiculous thread that was going on. So I butted into the thread, and I was like, Doug, I have the best idea. Why don't you and I do a space, and we'll answer all of the questions from retail investors? And he replied, and I didn't even think he would say yes. I really didn't. And he was like, sure, let's set it up. Here's my IR guy. Talk to him, and then we'll get it set up. And that was how it happened. That's it. It's not like everything is not some big mystery of like she's here to protect the hedge funds. Like it's silly. But like Virtue, for example, so on here, and there's their CUSIP, right? And they had 720 before, they had 720 after. So these folks who think they're naked shorting their stock, right? They have a position of 720 shares. You can go name one. They're all on here.
Isaiah, can you see him? Isaiah.
All right, I had myself muted. Yeah, I can see everything.
Okay, read some of those off. So because I want to.
Yeah, let's see. Aben Amro Clearing, Chicago LLC. Total olds 31,906. Total new 31,906.
So let's go to Isaiah. Can you scroll down? I don't know if you can control find on yours, but so TradeStation is one that they talk about a lot. They had 122,000 shares. So this is what the DTCC did to send to the transfer agent AST, right? So before it was canceled. But so TradeStation is one they talk about a lot. They had 122,000 shares, and ironically, the one that had some of the most was TD Ameritrade. They had I think 53 million. Robinhood had 12 million. I don't remember which page TradeStation is on. I'm sorry, I should have highlighted this for you, Isaiah, because it's a lot of brokers on here. But
you said this comes out pretty much to the total that was given out publicly, right? So this. So
the total, if you go down, it's actually less. So if there was any naked shorts, it would be found here. So right here we've got the total number of shares. It's actually less than the amount of shares that were allocated. And I think there was some disclosure from the company about 53,000 shares and some other things that also were canceled in the spin out and stuff like that. So they have a share total right there it's 5 pages of brokers. It's 163,258,152.
Bam.
So if there were naked shorts, it would be there in the total. I don't really know what else to say about that. And by the way, naked shorting was banned in 2008, right? In the housing crisis. There was total kibosh on it. So what they think is naked shorting, or what they claim about is that market makers have an exemption in Reg Show. It's the bona fide market maker exemption because they are liquidity providers, right? So say you or I wanted to buy some obscure stock that only, and I don't know if this is slow me down if this is going over, but it only trades 1,000 shares a day, right? It's pretty illiquid. And somebody goes on their brokerage and they want to buy 4,000 shares of this, right? But there's not shares available. So a market maker can fulfill that order, and then the only difference is like now it's T+1 for settlement. That changes to T+4 for them, so they'll have an additional 3 days to locate those shares and settle that trade.
Somebody asked Amy, I'm just curious your opinion on this. So Greg Caruso 1894 says, then why in the world would FINRA state there are 2.65 million oversold shares? 2.65 million is also incorrect. I think he's asking a question there at the end.
Inaccurate, right? So because when they go through the brokers, they can see which shares are long and short, so they can give you that number. And as far as the 2.65, that is also inaccurate. I think that there's talk about overseas, because FINRA only regulates U.S. brokers, right? So if somebody overseas was shorting stock, and like even when you're overseas doing that, you still have to go through an American bank, or like that bank goes through the American bank. Like there's a whole process for doing that. So if there's something that needs to be found over there, then I mean, go have at it. But FINRA's calculation by their broker, by looking through at the broker audit and stuff like that, is that there was 2.65 million shares that were short.
Any other questions?
Which is on a total of 163 million.
Yeah.
With 163 million, I think that's a de minimis amount of short share.
The problem there I have is like I get Rob wants to get to the questions, but man, that really log jammed Amy's explanation there. I don't know how you exactly shorten that, but especially since he kind of hopped off that short selling topic really quick, and I think excuse me, part of it is just like how much of a loaded question that is to break that down and explain it for someone who's a novice in financial markets. It's kind of a pain in the ass.
Any other questions on the app? Because I got a couple more.
Oh, yeah. Oh, there's tons. Let me know whenever you're ready. We can go through probably 50 questions.
Go ahead, Isaiah. Do it.
So the first one I saw that came up when we started was, and I think you gave kind of a good answer, but maybe just a succinct answer for everyone. Why do you care so much about MMTLP as a non-shareholder? You kind of covered that, but maybe just a succinct answer for that.
Somebody says your interest makes no sense.
Yeah, I guess they're curious why you're interested. Oh, we can't hear you now. What the heck? I know, it's so random.
It's not her. I think every time she's going to go out and get back in.
Yeah.
Is that happening because something we're doing?
No. I mean, that's impossible.
My recommendation to you,
Isaiah, if you leave me, I got no.
As if Rob is watching, but my recommendation, use Restream. Like, it has its own hiccups, but I'd use Restream. We use Restream. It's not caused me problems like this before, unless it's something on the person's connection end. Restream's been pretty stable for us. It's fairly cheap. I'd rather not pay $100 a year, but I mean, it works.
Plan B. That's it. Right. Just you and I. I'll sing the whole song if people want me to.
Yeah, there's nothing we can do to control her computer. That's only Israel can do that.
Well, now, how do you see it, Isaiah? Is it a confusing story to you?
Well, yeah, because it's finance. I don't really, understand. That's not my.
That's why I like to break things down to.
I can make money for companies, not necessarily organize it, right?
That's been my issue with this thing. Is I understand the basics of it, but when you get out into brass tacks, when I listen to some of these space calls, I get confused. I don't really understand what's happening. So I want to know what's happening, and that is why the MMTLP people that were upset, it didn't make any sense to me. Right? I always look at it as if you've got a good argument, make it.
They don't want you to understand. They want to exploit you.
Can we hear you now? Let's see. Oh, not unmuted. Can't unmute. Their mic isn't connected, it says. There we go.
All right, now let's try.
Can't hear you still.
What's going on in my world?
What in the world? I know I think it's a microphone issue.
Probably through a computer.
Yep. Wait. Try talking now.
There we go.
There we go.
So the problem is that every time I pick up my phone, it's picking up on my phone.
We've been there.
Oh yeah, we've been there.
There.
But we were asking about the. I think you're answering. You kind of answered already, but just a succinct answer for everybody.
Yeah. So I didn't ask for this interview, as you know. Like this was presented to me. I have friends that are on Twitter that were shareholders in this, and we talk every day, and talk about this. Like I probably wouldn't have any attention if like I don't know why they get so angry with my opinion about this, but they do. And that's just, I talk to people that I like on Twitter, and they happen to be shareholders of this, so here we are.
Somebody says, what party does Amy feel bears the most responsibility for MMTLP?
That's a good question.
The party that bears the most responsibility is the executives.
Why are you mad at me? Like I didn't tell you that you were going to get a dividend that you didn't get. I didn't freeze your stock. I didn't take your money. Like I saw someone reply to you, Rob, about I'm mad at her because she's standing in the way of my family's prosperity, whatever the heck they were saying. Like, no, I'm not. I'm not standing in the way of anything. I'm talking. I'm talking on Twitter. I'm talking on my show. I have an opinion, and that doesn't prevent you from anything.
Yeah, that's another thing. I'm kind of on your side with that one. I don't know what you are hurting by. I never did. I still don't. And maybe Berta or somebody in the chat can explain it to me. I don't understand how your opinion affects anything.
It doesn't. It doesn't. And that's the craziest part about these polls, right? Like, and they get very tribal, and then they all attack, and then they're doxing, and they're losing their minds because someone has an opinion about, like, they make themselves very prevalent and present on Twitter, and then
they're great. They're great at what they do. I give them credit all the time.
And then they ask why people are talking about them.
Yeah, I give them credit for the they're terrific with social media.
Right,
They've gotten a story to I mean, for me to cover it was I'm not I'm not Tucker Carlson. I don't mean to claim that I am, but I'm you get a lot of people that want you to tell that point. What you want over and over, the guy that was stolen or not, there was sunshine on it. That hands it to Donald Trump. And the debate in and of itself.
They're having all this, I'm biased toward the securities problem. There is, and there is a protection of them, and there is a bolstering of them up, and they talk about how they're harassed and they're victimized. And I think I messaged you yesterday. Right? Might have said this, Drew. I think you were in there for like the last 30 minutes.
Yeah, I heard 30 minutes. Didn't understand any of it, but
Then it settled 200,000 shares that were failed to deliver on after the stock was halted. So, and I believe they were executed. But so those don't just go away; they are still there. And if the stock ever trades again, right, because Greg McCabe has the option to get accused of and have the stock trade, and all of this goes away.
Yeah.
But he doesn't want it to trade, and that's his choice. I don't have anything to say about Greg McCabe's choice to let this trade. That's his choice, and he can make it.
Do you know why he doesn't want it to trade? Is there a strategic?
That's a great question. That is a great fucking question, Rob. I don't think I have an answer for that. There's no good reason for it to trade, especially for a company that's like that's a spec oil wildcatting company. You need cash inflows to keep the company operational, and by choosing not to have the equity trade in an open market as opposed to some gray market where the actual investors have to hook up with each other to trade, it makes no sense. You're denying yourself a cash flow to help fund your operations. I don't get it. It's dumb. It's super dumb.
Advantage to not trading it right now? Does it open it back up? I remember people telling me they did not want it to open it. They want it frozen time so they could get all the information right there. If they start trading it again, all that information goes away. That's one theory that I heard. Does that make sense to you?
Yeah.
No.
So I don't know. I'm not Greg McCabe, so I don't know his reasons for not wanting it to trade. I mean, there's a whole lot that goes into being a publicly traded company. Maybe he doesn't want to have to deal with all of that, which is fine. But he's still a publicly reporting company, so he still has to do his financial filings and stuff like that, which is the trouble that they've had recently with the S1, is incorrect financial filings or restating the financials because he did write down the assets to zero. That's irrefutable. So he had to refile those and things like that. So I don't know his reasons for not wanting it to trade, but that's his choice. And it was communicated to them in disclosures in the S1 and the prospectus. So they were fully aware of it. Like if he had not made them aware of it, I think I may have had more of an opinion on it, but because he did, I don't.
Okay. John Rambo says, how much shares did the broker sell compared to the authorized issue by NextBridge? We need the actual share count. So how much shares?
I think we showed it, right? So I mean, they did a broker audit and there was 163 million shares, like actually less than the allocated amount of 165,000 or 165 million.
What do you have to say about the dates on the U3 halt? Because I've had a lot of people back and forth saying everybody knew this was ending on the 8th. They did not have to the 10th. I think somebody sent me something last night with John Berta.
I don't think everybody knew that it was ending on the 8th. I don't think. I think there was, and this is where I will say that I think FINRA made mistakes, right? Because this S1 was confusing, and in my opinion, it was by design. But so how a dividend works, right, is that there's a record date. There's
she's gonna get an ex-div. That's good.
And there was so much confusion, and I can pull up if you like. Let me pull up the thing.
No. I would have stayed a little bit longer. Explain what an ex-div date is. Explain that when you have a dividend, you have the announcement date when it's announced, the dividend, and how much it's going to be, and then the date that it's going to be distributed, and the date that the shares trade X the dividend or without the dividend. And since this was a vehicle for transferring the oil value assets, either complete cash from the sale or the spin out into a new entity, after the ex-div date, the security would have no value, which is why there had to be a halt. In a normal dividend situation, you still have your equity stake in the company. You still have the equity stake in the company. So if it keeps trading, whatever, you're less the dividend, the price of the share drops by the value of the dividend because that's money that comes off the company's balance sheet, blah, 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 blah. But in this case, like the complete value of the security has been removed. There is no more value in the issuance. It has all been transferred to NextBridge Hydrocarbons. So for it to trade past ex-div harms investors. it had to be stopped at the end of the ex-div date. Trading had to be stopped because otherwise you're trading a security with no value. So why would TradeStation inform customers they're unable to deliver to the transfer agent when they do that? Well, again, it's because there's no liquid market. I mean, there's no liquid market for the securities. If TradeStation, because TradeStation as part of the broker agreement says that you automatically offer your shares up to be in their share lending program to be short sold. So if there's a short sale into and the market trading stops, there's no way to get the shares back. That's not naked shorting. That's not anything illegal. That's a function of the market collapsing because the ability to trade these shares is stopped. So there's no way for TradeStation to recall the shares. And this is an intentional decision by NextBridge, which screws over everybody. So, you never know if the short seller wants to close, but it's in a liquid market. There's no way to get the shares back. So this is by no one's fault except the company. And so there is no regular trading market. So you can't get your shares back, so they can't AST you. It's that simple. If you got complaints, go talk to NextBridge. They're the ones fucking you.
Pauses me.
Pause you a little bit.
Yeah, just a second.
We can look at Rob's new lit up clouds. There's a storm.
Probably.
So, there was one on the 6th and one on the 7th about the way that they were. Does that pause me if I click over to it?
No, we can see you.
Okay. So
No,
here's the part, right? Amendment shareholders with settled positions as of 12/12 record date will receive 1 share of NextBridge hydrocarbons, and right there, hold on. For every 1 share of MMTLP held on the pay date of 12/14/2022. Purchases of MMTLP executed after 12/8 will not receive the distribution. Will not be quoted X. No X dividend date. MMTLP shares will be canceled effective 12/13/2022. So there was a change in this part right here on the 8th. I can pull it up or I can just tell you. They said that the shares will be deleted 12/13/2022 here. So, but the bigger issue is this 12/8 date and will not receive the distribution, will not be quoted X. So how dividend works is that, are you guys there?
Yeah, we're listening.
Oh, I only see me. So on the dividend, there's an X dividend date. When it says right there, no X dividend date, the X dividend date is the first day that the stock trades less the dividend. So when you have a dividend paying stock, whatever the dividend is, the stock adjusts by that amount, and that's the X dividend date, right? That's again this first day that the stock trades less the dividend. So when you have a preferred A share that is being extracted for the common share of NextBridge hydrocarbons, that is the economic value of that share. That and no one after was going to get that distribution. So that.
Yeah, that's the part I want to emphasize. The entire economic value of the dividend gone. Share.
That makes the 9th the X dividend date that they said there's no X dividend date, but it is because that value was extracted on the 8th. So the 9th would be the first day that the stock is trading less the dividend, and that made the share worthless. When you extract MMTLP from it, when you extract the preferred A, that share becomes worthless. So in what FINRA's eyes, right, and then you have the stock, the 9th and the 12th, right, that they keep saying are supposed to be trading days. That at that time it was T+2 for settlement. So they needed those 2 days for those shares to trade or to settle. So that's the settlement issue. Like that they were well within their right to do that. But I think for me the more pressing part is that you extracted the value of the shares on the 8th, which means you were expecting people to buy something that was worthless on the 9th. Like, how do you expect them to buy something that is worthless? And for FINRA, I think they're looking at it and saying, these people are holding the stock and they have read all of this information that we all have, the 424B4 and the S1. They understand what's happening, or I think that it's reasonable for them to think that these are informed investors who can manage their own brokerages since they have self-managed brokerages, and that they should understand what they're reading. But at the same time, I get that I don't understand everything. I'm not a market expert, so it was confusing. That whole line there was confusing. The 12/8 day, the 12/12, the 12/14 day, no X dividend. Like it was a lot of information, and it was I can understand how people would be confused. But I also think that from FINRA's standpoint, it's reasonable for them to think that people understand the things that they're investing in. And that's just my opinion. Maybe other people don't feel that way and they feel like they should have been held hand through this, but I don't. That's just my opinion.
And that was their big argument, right? Because they believed that they didn't have the final 2 days to settle. And that caused all the problem because then it's.
But like Amy said, like that was a great explanation of that. Those final 2 days was to settle the trades that happened on the last day before the X div, because it T+2, 2 days to settle. So that means that those 2 trading days had to be kept. Like they were just settling prior trades. They weren't actual new trades. They were trades that were already executed before the XDiv that just needed time to settle. And that's why you had the entire situation and the way it is. Yeah, that was a nice explanation.
On the 9th, there's nothing.
Yeah, and I think they have to. How could they, in good conscience, sell something that was worthless? Yep. Because the value of that was extracted on the 8th. Anyone who bought after the 8th would not get the distribution. So what you were buying on the 9th and the 12th, it was nothing.
And you think that is confusing a little bit, though, right? Because I think that's that's kind of been my argument a little bit. Is
I guess I can say that I can see
retail traders are having trouble figuring out what's going on here, and that seems
Yeah, I'm not. I won't completely discount it. I can see how that would be confusing for a lot of people. Yes.
One more question.
But I think a lot of people also weren't confused by that because they all sold on the 8th. That's why the stock dropped from $8 to $2 because people did understand it, and those people sold their shares. And I think you had John Barter saying that you had to buy by the 8th. Like it was everywhere. But I just don't think that people fully understood what it meant. And the no ex dividend date and that stuff like that, like, yeah, that I can see how that would be confusing. And yeah, if you want to talk about TradeStation, we can.
Yeah,
that whole TradeStation thing is, they did not admit to an overage. What TradeStation admitted to is.
Let me read this real fast, Amy, because a lot of people just listen. It says, at the Robb Carter Show, why would TradeStation inform customers they are unable to deliver to the transfer agent? Why would they do that if there wasn't an issue?
There is an issue. The issue is that it's not DTC eligible. So people who, when you can, shorting stocks, just normal shorting stocks.
Hey, sorry to interrupt you guys. I got a tornado warning. I'll be right back, okay?
Okay.
Oh boy.
That's why we're in such trouble with our lighting and everything, because we got a big storm coming.
Nothing like a tornado warning in the middle of a wow. Everything that could go wrong went wrong with this live stream. Damn.
So but just to go, I can go on my brokerage and short a stock, right? If I can find a borrow, right? Again, when I go onto my brokerage, I say I want 1,000 shares of whatever and put the order in. If they have it available to me, then I will be able to put that trade on. So, and there's a lending program. All the brokerages have a lending program. And if you choose to lend your shares out, I personally lend my shares out on a bunch of stocks because I get paid interest when my shares get loaned out. So it's just another form of passive income. So like for me, the way I invest is that my money should always be making money. So I'll sell options around it. I lend them out so that I can collect interest, whatever it is. So that's an option. So for TradeStation, like they had people who had the lending on, and somebody went to TradeStation and said, I want to short this, and they lent the shares out to them. Well, then the stock is halted. So like this halt didn't just trap longs, it trapped longs, shorts, it trapped everybody, right? Because I know somebody who has a short position and he still has that obligation on his books, and it will remain on his books forever. But so what TradeStation said in this was, so they got a certificate allotment, like all the brokers did. And what happened is, so what I think a lot of people don't understand is that ownership of shares follows the shares, right? Like, so I can buy the shares, they can get lent out to someone, and then the ownership is going to follow them, right? Not the beneficial ownership, but the tracking of the share is going to follow the share. It doesn't stay with me. So what happened was somebody sued TradeStation or tried to sue TradeStation and say that they don't have their certificate, or they can't transfer their certificates to AST. And that's correct, because that person's shares were loaned out and then the stock was halted. And currently those shares are owned, or not beneficially owned, but owned by the person who was in possession of them at the time of the halt, which would have been the short seller, right? So when you are wanting to transfer your shares to AST in the aftermath of all of this, you have to do what's called a transfer of ownership to transfer them to AST. And what TradeStation said is, we can't do a transfer of ownership because they're beneficially owned by the person who bought them, but they're currently with the short seller over here. So we can't get certificated shares from this person as a transfer of ownership for this person and send that to AST, because they can't, that like right now there's no option for the short, like the way that a short seller closes is that they buy the stock back in the market and return the shares back to the broker. So right now there's no way for the short seller, who's now currently short Next hydrocarbons, because that's all really that happened. Any short that was in MMTLP is now currently short Next hydrocarbons. And yes, they can do that. But so what happened is that they can't fulfill a transfer of ownership because the shares are obligated on the person who sold them short. They have an obligation on their books to fulfill that if it ever starts trading again. And the broker has the liability on their books because they lent them out. So those two things, they can't reconcile because the shares don't trade. And therefore they're saying, we can't give you certificated shares on shares that are loaned out to somebody else. And that's really all that happened. They did not admit to an overage. They admitted that the shares were on loan and that they cannot recall those shares. And they can't because the stock doesn't trade.
Yeah.
One more thing I really wanted to
Great explanation.
Go
ahead, because I got to wait for Isaiah. Isaiah might be fighting a tornado.
I'm back.
Oh, there he is. Okay. Well, go ahead. Let you finish. We got 3 minutes.
Adam was saying, yeah, this is what she was saying, right? The record date was the 12th, and you need to be on record by the 12th. Only way to do that was to buy on the 8th because it was T+2, which is what I was saying. But the FIF thing, the FOIA thing, this big nuke that they have, right? So, and I don't know if you want to go to that, Isaiah, with the FIF, but so they think that it's the Financial Information Forum. Like I can send you mine, or you can, if you want to just pull up the financial information for them. But so they're a group. They're a trade group, an industry trade group that has members, and they have, I think, over 100 broker dealers that they represent. And they're like here on the thing. Do you want me to share it with you, Isaiah? Are you there?
Yes. Okay. Yeah. I'm on the website right now.
They're an industry trade group comprised of over 100 broker dealers. Go back up a little bit, Isaiah, for me.
Sorry.
Exchanges, ATS, and financial technology vendors that work in a collaborative environment to address the implementation issues that impact financial technology industry across the order lifecycle. So the SEC is kind of always putting out rule changes or rule proposal changes or corporate actions that can be a little confusing for brokers that are coming in, or anything that's happening, right? Like if someone's doing a takeover, if someone's doing anything, right? Anything that has to go through the SEC, right? This group is there to explain it and get to like the broker dealers. This is their whole job, is to work with the SEC. So this idea that this group contacting the SEC, because I'm guessing maybe TradeStation is one of the brokers, their members that they work on behalf of. And they said, hey, we have shares on loan that we can't recall. And what they were referencing was an S1 where they wanted to do a sorry, I'm losing my words, my mouth is dry.
Happens.
Subscription rights. They wanted to do subscription rights on a subsidiary that they had not even formed yet. And what I'm guessing TradeStation said is, and what it was conditional on them transferring their shares to AST. So these brokers who have shares on loan are saying, we can't do that because there's no mechanism for us to recover these shares. So if this is going to be based on them transferring their shares to AST, we're not going to be able to do that. So the FIF went to the SEC, which is, they literally work with them on a daily basis. So they went to the FIF and said, they went to the SEC and said, hey, we have members that, can't fulfill this thing here. And it ultimately didn't matter because the SEC basically told them, you can't do the subscription rights because the subsidiary doesn't exist and there's no financial information for it, which is why they ultimately canceled that S1 for the subscription rights. So this whole thing, all of this, I don't get how two people can read something and see it completely different, but that is the world that we live in now.
Oh yeah. All right, Amy. It's a very complex situation. That's why it's
like
hard to understand.
A whole lot in an hour. So I'm sorry.
It's very hard to understand. There's no doubt. If you're, I was talking to a friend of mine last night and I said, it's gonna be interesting.
That's the best explanation of the whole FIF thing that I've heard, because even that thing I was not following. So Amy ended on a high note. I know she wanted me to get some notes, so I'll probably have to get those to her later. But on the whole, a good job. It's just that we are novices at in the market, and I think Robb would even admit that he's at beginner level. Like we have intermediate knowledge. We sort of have an understanding of what's going on, and it's hard to get someone even to make that first leap. And if anything, that's the only thing I would change with what Amy did, is just some more a little bit, just maybe a few analogies might have even been good. Let me check on the whole James Fishback thing, because we'll check again at definite midnight. But the way it looks is that poor old Jamesy boy, Mr. Fishback, has not fulfilled his obligation on the citation and contempt. And the next step after that, if he does not comply with the court, is that you would request the court to issue a bench warrant for his arrest and to find him in contempt. He's got an hour, so yeah. I'm gonna guess that he's not replying in the next 20 minutes that he has before the clock strikes midnight and the deadline elapses. But let me pull this over here. Maybe we can, take a bit of a look. So I wouldn't say I'm interested in all these deals. I will say for a matter, I am in the Papa John's one and the Bright House Financial deal. Though Bright House is starting to get to the point where the gap. Just to let you know, the true column here is, so market average is, roughly 10% a year market gain. That's the average aggregate of the market. And so the only time this lights up as true is if the return on investment of the investing in this M&A arbitrage would net you a better return on investment than just being in the market. And I have shares lower at that price, and man, it's getting to the point where really close to where I bought in on the, I may just cut a little bit and take profits on that one. But down here is the GameStop one. And so it was at 8% and now it's widened up to 12%. I would say that a good indication that the market is having some troubles with the idea that this deal will go through is that, eBay was all the way up here. It was like 12% was how much it was up. The value had contracted, like I said, to 8%. This a bit. And so now it's completely collapsed down. It was like 5.25 when it closed, and we've lost another what? Well, it's back to flat, but it after hours it was down 1% more, and now overnight it's kind of remedied that. So like people have really faded on this deal being a real thing, and a lot of it has to do with how Ryan Cohen handled himself on CNBC, and getting to see his 13F, and seeing that he doesn't really have that strong of an interest in eBay. He's got a lot of options, but he doesn't have really any voting power or shares. And the deal looks like garbage, just to be frank. So market has really cooled off on this deal happening. I mean, and you look at GameStop, it had a premium where it was up almost 10%. It was up 8% on some of these more solid candles. And then on the day, it was down 10%. After hours, down another 1.25. It's recovered a bit, but like still, I mean, you're going to see this if you have an M&A deal. The acquiring company is going to take a nosedive based on what they're acquiring, and in this case, GameStop is acquiring something larger than itself. You would think that, especially since you got cash coming off of the balance sheet to help pay for this deal, I would have expected some more compression on the share price. And I mean, maybe as this goes on, you'll see that. But so far, it's holding up. But like this is what happens traditionally when you have an M&A deal. Like, the company's going to lose value based on the deal because there are no free lunches. That'll do it for us tonight. I'm going to probably stay up a little bit later to see if Fishback, does comply with the court's request. But I got a good hunch he isn't. He is not. But it's nice hanging out with you folks. And I think that will do it for tonight. See you guys Saturday. As I said, we will have Nick Nemeth back on. We'll be talking about his investment in Groupon as an activist investor to help try and turn the company around. So that'll be an interesting discussion. I know the last couple times that we've had Nick on, it's been very interesting, but I think I'll really like this discussion. It should be interesting.